nominal GDP contracts, and if companies are having a harder time selling their products and services into perhaps a overstretched consumer, now you have to bring in maybe a bigger story if these tariffs really start denting margins, and that's how you can get. You don't need a recession to get flat earnings growth in 25 and 26.
And now, folks, right on to Audible. Paul, did you ever confront this? Like when you were writing reports, the macro shifts, and you've got to readjust your spreadsheets and the 2 pages you're writing in front of that?
Yeah, absolutely. Particularly with media.
Are you doing it because you're doing it, or your clients telling you to do it?
My company's driven by advertising, particularly very cyclical, so it's easy to model that. But I mean, I'm looking at
so much on the Pacific Rim in their evening. This is a lovely lady from Shanghai emailing in, Mr. Purvis, when do I buy the day?
Well, I think there's more downside coming. One thing to think about is look at long-term momentum signals, right? Like I look at the monthly MACD of the S&P 500. That is just last week turned a key point, and it's exactly like what happened in March of 22. We went to a bear market there. I don't think dip buyers are coming in anytime soon. I think the clarity, this uncertainty cloud is not going away. People talk about the Trump flood, and my point back to them is that the Trump flood is not a pet because the process by which that unfolds, what's the strike price? When do we get there? And all that kind of stuff. Big questions. Will we ever get there? Right? It's another broader question. But let's assume a bull case here that we get sometime later this quarter we get a very clear set of policy. That doesn't. It's asymmetric. That doesn't mean that the certainty comes back as quickly as it disappeared. Tariffs are a very. It's a weapon that Trump is using that is. To realign the industrial policy of the United States, but it can create a lot of damage. Repairing the damage is a slower process.
Paul, Purvis is a threat to society. Get one more question in here. But futures now just ticking negative 1,000, negative 1,047 on the Dow, the NASDAQ negative 2.8%. This is all Michael Purvis is doing.
Exactly. The RSI, the Relative Strength Index for the S&P 500, we're now at 23.
Yeah.
And that's below that 30 level, which is historically a technical buy signal.
Oh, yeah, no. And to this person's question, I mean, from a very near-term trading point of view, yeah, I would expect a bounce here this week. Absolutely. 23 is pretty extreme there. And then you got to watch what kind of selling pressure comes into that bounce and so forth, and how it reacts to other news flow as well. But I think valuations and earnings, buying a dip on a strategic basis before the earnings season is a very tricky thing. And earnings are just going to start coming in.
Michael, thank you so much. Michael Purvis told that this morning. S&P futures at negative 140, the VIX 49.01. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, John. President Donald Trump says he won't back down on his sweeping new tariffs. The next round of tariffs are coming Wednesday, just when President Trump said that they would start, according to Commerce Secretary Howard Lutnick. He spoke Sunday on CBS's Face the Nation.
There was no postponing. They have definitely been staying in place for days and weeks. That is sort of obvious. The president needs to reset global trade.
Commerce Secretary Howard Lutnick on CBS's Face the Nation heard Sundays on Bloomberg. Meanwhile, Barbados Prime Minister Mia Mottley, chair of the Caribbean trade bloc CARICOM, posted a message on her Instagram account. She says fewer people may travel.
We must not rely solely on one or two markets. We need to be able to sell our Caribbean goods to a wider, more stable global market.
Global markets have been taking a hit lately. President Trump will host Israeli Prime Minister Benjamin Netanyahu at the White House today. At the top of the agenda, the renewed violence in the Gaza Strip. That will include what are now the stalled ceasefire talks to release more hostages. Other items are also at the top of the agenda, including Iran, and then, of course, the tariffs. Rivers rose and flooding worsened across the U.S., South and Midwest, threatening communities already waterlogged and badly damaged by days of heavy rain and storms. Frankfort, Kentucky Mayor Lane Wilkerson says parts of downtown are protected by the flood wall.
We're already starting to see water come in there. So because of the scope of this and the projected crest, that's what has us so concerned this time.
At least 18 people were killed. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg Tom Paul-John.
Michael Barr, thanks so much. We are commercial free across the nation, Canada and Mexico. Good morning, Mexico City. This morning and around the world, we say good morning to all of you. On YouTube, subscribe to Bloomberg Podcasts with futures at -140, S&P futures at -140 from the Interactive Broker Studios of Bloomberg Business Flash. John Tucker.
And the Futures Report brought to you by Oppenheimer. Oppenheimer focuses the power of their thinking on you, creating customized plans to help achieve your goals. Put the power of Oppenheimer thinking into your investing, wealth management, capital markets, investment banking. We'll start off by quoting the Communist Party official newspaper in China. They have an editorial this morning declaring Beijing is no longer, quote, clinging to illusions of striking a deal on trade with the U.S. Canada also trying to fight back. They've initiated a World Trade Organization dispute regarding U.S. duties on autos and auto parts. Kevin Hassett, director of the White House National Economic Council, spoke earlier on Fox. One of the headlines, he says, more than 50 countries negotiating on tariffs. Meantime, traders increasing expectations of the Fed cutting interest rates this year. There's now a 40% chance of a 25 basis point cut by next week. And then Spirit Airlines, says the CEO, Ted Christie, stepping down less than a month after the discount carrier emerged from bankruptcy. Again, S&P futures down close to 3%. Dow futures down 2.6%. But NASDAQ futures 3% lower. And we check the markets for you all day long. Right?
Hello, this is DrPaulCottrell. We are doing a live stream on Rumble, YouTube, and simulcasting on X Spaces. If you have a question or you'd like to give me your opinion about what's going on, especially with the market, please type it in the chat or go to X Spaces and ask for the mic and you will be live on the show. I'm also streaming on my website, the-studio-reykjavik.com. So you have different ways to see the show. I have the larger screen for Rumble and then the telemetry screen with the real-time market on YouTube. You can see both versions on my website, the-studio-reykjavik.com. Please help support my work by making sure you subscribe to all the channels. I have 4 channels on YouTube, Brighteon, Bitchute, and Rumble. All the links are in the description of this video and all my videos. Please help support my work by making sure you subscribe and getting the notifications. You can follow me on X and on GETTR. In addition, please help support my work. All these videos I do are for free. I have thousands of videos for free out there. I don't put it behind a paywall. Please help support my work by donating on my website, the-studio-reykjavik.com. You can donate through Stripe, PayPal, or buy me a coffee. You could be a paid member to my Patreon channel. It's the paid members and the ones that donate that allow me to do these videos for free. In addition, I have great products on my store, ebooks, supplements, course material on pulmonology and immunology, lots of things to learn. So please help support my work. Now, before we go to all the different news, there's a lot has happened over the last few trading sessions, especially Friday, Thursday, Friday, overnight session last night, all very negative for markets. All right, so there's going to be a lot to cover. So before we do that, please help support my work and get the great products that I offer. Let me talk about one product right now. Go to my store, the-studio-reykjavik.com, and get the structural nano silver soaps that I have. You can get it in peppermint, in lavender. Also, you can get it in charcoal tea tree and lemongrass. Get a few bars for your household, help support my work, and help support your health and wellness. Very high quality structural nano silver soaps. Use discount 5, all caps, discount 5, and you get $5 off. And if you purchase $150 or more, you will get a free gift until supplies last. So please go to my store, the-studio-reykjavik.com. The link is in the description of this video, and purchase the products. Okay, let's go to Bloomberg.
They can't be proactive like they've been in the past couple cycles. They have to be reactive, and that's a tough place for risk assets right now because you don't have this Fed foot. And they're coming from a situation, obviously, in 22 and 23, where they mentioned inflation being transitory. They're not willing to say that right now. So I think the Fed just wants to get a little more clarity. It wants the dust to settle. So if you're the Fed, you have to, I think ultimately they're going to be on pause for a little bit, but I do expect them to cut much more aggressively at the back half of the year and in 2026. And that's what you're seeing the market price in. You're seeing the market in June 26 pricing at 280 Fed funds rate.
Andrew Sorosky with us. Don't go away. Stay with us, Andrew. We're going to come back to you after the market opening. This is so important. I want to bring this to you. Steve Henke of Johns Hopkins, thank you so much for bringing this out on Twitter. This is Thomas Sowell, the arch academic conservative of Stanford and forever Hoover. Thomas Sowell, 94 years old, on Trump tariffs. If you set off a worldwide trade war, that is a devastating history. Everybody loses because everybody follows suit, and all that happens is that you get a great reduction in international trade, that voiced by many others, including liberal economists, over the weekend. 1 minute away from a market opening. Paul, help me do the data check here. I'm going to go to dollar. I'm flat on DXY, yen 146.68, euro stable 109.67. The idiosyncratic Turkish lira does nothing, 38.01. I'm going to call it a pretty quiet day in currency, although as Sassauer mentioned earlier, NIMBY is the thing to watch, 7.31.
But the commodity space in general, Tom, kind of rolling over as well, showing some weakness. WTI crude oil off over 2%. We're seeing right at $60 a barrel for WTI crude. And again, our good friends at BNEF, they estimate the cost of production getting a barrel out of the ground is at $55.
We usually don't do first derivatives over 5 minutes or 20 minutes, but today we make an exception. I'm going to make clear the vector of the last 20 minutes on equity markets is worser or souther, as they say. 140 to negative 164 on S&P futures. Dow futures were negative 900. They deteriorate negative 11. We're going to get a negative 1200 here on the opening with a VIX of 49.00. Commercial free. Here is John Tucker with the opening.
There you have it, the opening bell at the New York Stock Exchange. Right out of the gate, we are sinking the S&P 500 3.2% lower. That is down right now 164 points. And right now, all 11 major industry groups in the S&P 500, they are down, being led lower by consumer discretionary. That's home to Tesla, as well as communication services.
All right, so on the dashboard, the S&P 500 is trading right now at 4,898. VIX is spiked at 49. The Euro USD is trading at 1.09. Oil is trading at $60.23 a barrel. BITO long ETF for Bitcoin is 16.69. And the USD Japanese yen is trading at 146.69. Okay, so what am I looking for? What am I looking for in the markets, okay, as stress indicators? All right, the Japanese yen has been strengthening over many weeks, all right, going from 150 to now 146. Now, if the Japanese yen breaks 140, big problem, all right, big problem. Now, VIX is now in the 50s, all right? If we keep on having elevated VIX, then more of a market sell-off is going to happen, and we're talking about some serious drawdowns in the broader index, all right? Now, normally, VIX spikes and then comes back down. It's called heteroscedastic. The question is, how elevated can it stay, all right? Now, if it goes to 50 and then comes back down and stays at the 30 range, we'll probably weather the storm. But if this gets to 60 or 70, then you're talking a lot of stress in the market. So we're at 50 right now, but the question is, are we going to see a 60 or a 70 in the VIX? Now, I don't think we will, but it's possible. Now, the S&P 500, remember what I said, there was a support level at 550 when you're looking at SPY, but I'll read it off based on the index. There was a support level at 5,500. It broke. There was a support level, all right, at 5,150. It broke. There was a psychological barrier of 5,000 last night. It broke. We just opened up below that. So we broke that psychological barrier, which I thought was weak to begin with. So that's proven correct. The next support level is 4,810. We are about to break that, all right? If that breaks, there's going to be a much larger sell-off. So it's really important that we, the United States market for the S&P 500, trade closes above 4,810. If it doesn't, it's going to sell off hard. Now, no one is giving you the details at this with the specifics for these breakpoints for the S&P 500. All right, we're trading at 4,892. If it breaks 4,810, it's going to be a major sell-off, but it has to close below that number. So we'll see, but it's really close. All right, if that does happen, then I have to do another analysis. Now we're talking about maybe 4,450. It's possible. It's possible. What surprised me last night is the veracity of the sell-off in some of the Asian markets. Some of them were down 10%. Some of them were down 6%. There was circuit breakers that were triggered during the Japanese session, right before the Japanese session took on. So there were circuit breakers that took place during the futures market. So it's really an issue here. All right. Now, it's not like the world's falling. I still think, and I still believe this, do not panic through this. Do not panic. It may still continue to sell off, but do not panic. Buy in and take advantage of this. But buy in slowly, okay? Don't just throw all your cash in right now. Don't do that. But slowly buy into this. And that hopefully this thing's going to stabilize. I thought it was going to stabilize between the 5,000 to the 4,810 and just kind of consolidate there. Doesn't look like that's going to happen. It looks like it's going to consolidate one fib retracement farther down, which is about the 4,450 mark. But I have to do that analysis to give you the fine details. But don't panic, all right? But it's most likely going to go down more. All right, so right now we're trading at 4,877. Again, key support level, 4,810. If it closes below that, it's going to sell off more. All right, let's continue.
Based in credit and the yield goes higher, are we at a tipping point in credit that affects the equity market?
It's a great question. I'm certainly not an expert on the credit market, Tom, so I'm gonna deflect on that one. But what I will say is that, maybe up until about a week ago, and it was a little bit before the Rose Garden ceremony, to be honest, but we had actually been seeing small caps starting to outperform large caps. And like on the big down days in the market, small caps weren't doing quite as bad. And I thought that was interesting. That was making me feel a little bit better because they had already been so de-risked. They were so cheap. And we felt like there was this rotation going on that was hitting the bigger caps harder than the small caps. But that's all changed. So we've seen that attempt that small caps were making to bottom now fail post the Rose Garden. And that's going to be very, similar, right, to that high yield cohort of the market. And what that's been telling me over the past few days is that those recession risks are getting priced in rapidly because as cheap as they are, and honestly, Tom, my valuation PE for my valuation model, the market cap weighted PE for the Russell 2000 was at 13.5 times on the Thursday close. In a recession, it tends to go to 11 to 13 times, even before you clean up the excess earnings optimism. So these things have been acting pretty bad. But right. I do think that credit markets holding up, not deteriorating, that's been sort of the thing that's kind of kept people, and I hate to use the word panic in markets like these, but that's been kind of the thing that's kept people calm. But that may be a necessary part of the bonding process we have to go through in here.
Let me uncalm you right now, Paul. The VIX 52.07.
Exactly. Lori, what's the earnings risk still out there in the marketplace, do you think? I mean, is it a flat earnings year in 25 or maybe something more than that?
What we've got modeled is kind of a stagflationary scenario right now for 258, which is well below the bottom of consensus, which last I checked was 269. Who knows what it is now because things are starting to change. But what we have found is an interesting question you asked, Paul, because if you kind of go back and look at bad earnings years, what we often find is that in kind of big crises, big recessions, you're seeing earnings growth on a year-over-year basis going down like 13% or something worse, right? So some big ugly numbers. But there are actually a lot of years where earnings are just flat year to year. And when we see companies, sort of being able to muddle through, that's often what's happened. So when we recently changed our earnings number to 258, we said, kind of the downside scenario, if we want to kind of put in a bear case, we're thinking a lot about kind of that 246 number for now. That could change if we go into a full-on recession. Yeah. But outside of that, that's...
All right, we're at 4,863 on the S&P 500, and we are down 4% right now.
You can cut the funding on the Acela Express. Get the Bitchute here in a moment. I just had a negative 1,500 print on the Dow, negative 213. I want to emphasize futures at 929 were about negative 140. We're now negative 210 on the equity market. The VIX explodes out. That's the right word. 47, 48 at the 52.76. I never use this phrase. I'm going to use it, Paul. On a half-hour to half-hour basis to the Asia opening, we're sort of in uncharted territory. It's different. And Paul, the yields go up. There's a fear trade into bonds, price down, yield up, and the whole market.
Price down, yield up. What?
Here, Paul, what's going on out there?
Of course, and I think, I was just asking, where do we go from here in terms of policy? I'm not sure anybody really knows, and that kind of goes to the earnings question. Like, I don't know how bad earnings could get because I'm not sure how far this policy is going to go, and I think that reflects a lot of what the market's doing. So, Lori, I think most of us listening, watching here would say, you know what, 12, 24, 36 months from now, this market's going to be higher than where we are right here, probably meaningfully higher. So I should probably be doing some buying here. How does that conversation go with you?
Well, look, I'll tell you, it's sort of the fly in the ointment for the strategist right now. And I see this in my own modeling, Paul. We have 5 different models that we use to come up with our price targets. And I know everything is scary. People are like, math? Oh my God, you're doing math. But that's what we have to do, right, to keep ourselves grounded. And when I go through and look at my modeling, the one model that's still pretty constructive is actually the sentiment model. And it's basically looking at AAII net bulls that are down around GFC lows, 2022 lows, 1990 91 recession lows. And that is a good reminder that as quickly as things cascade onto the downside, they tend to come roaring back when you get some resolution. And so I think that's, that's something a lot of, us forecasters have had in the back of our heads as we've tried to navigate this environment. It's hard. It's not impossible, right, to say what is that trigger. But it is something we have to watch, and it's a necessary condition for a bottom that's already been put in place.
Tesla not to a 200, 199. We're not there yet. I don't want to be too gloomy. But I'm going to go over here, Lori, to something nobody talks about. And of course, we're on the Canadian border on this. Ford Motor under $10, $9.11, right down on lows for 2025. And they got a PE multiple on Ford of 5. And maybe the forward multiple, which we're going to blow up, we know that, is 7. Are we in value territory in medium and small cap stocks like we clearly are with the Ford Motor Company?
So, I was having an argument with someone about that this morning. Tom.
Not your
I was
husband.
talking about, not my husband. I'm on a trip. I'm in a hotel room, so I believe he argues with me about plenty of things.
The marriage survives.
Yeah, but not. He's very scared of my tears of fear chart. I had to take some passwords away from him. But the reality is that when I highlight this small cap chart and that we're at 13 times, or at least we were as of Thursday, people say, well, we have to adjust the earnings, and I say, I know we have to adjust the earnings. That's a separate thing, though. If you look at, sort of historically, my forward PE data, 11 to 13 times is where small caps tend to bottom out, even when the E is too high. And people just can't mentally wrap their heads around that. But it is something important you have to keep in mind, because it's one of those things, again, that you.
Okay, so what I'm going to do is I'm going to give you my further analysis on this. Okay, so if we trade below the 4,810 mark for the S&P 500, the next support level for the large fib sequence is 38% retracement, and the 61% retracement on the small fib sequence. And so it will, the next support level is going to be 461 or 450. So 4,610 or 4,500, okay? If you're looking at just the index. If you're looking at SPY as the ETF, it'll be 461 and 450. So it's looking like we're going to break the 481. All right, it's at 4,838 right now. So we're going to break the 4,810. Okay. So the next support level is going to be 4,610 and 4,500, somewhere in between there. Those. There's a little bit of an overlap in that range between the two fib sequences. If that breaks, if 4,500 breaks, the next support level is 4,140. Okay. So 481, 4,810, and then basically 4,500.
Right here on Bloomberg Radio, I'm John Tucker. That's your quick business flash.
Where is the money gone?
Well,
No bonds, no Bitcoin. I don't know.
yeah, let me do this before now that I've got.
All right. Please go to my store, the-studio-reykjavik.com. I'm telling you how to navigate through these markets, help support my work. All right. Don't be fearful. Buy into this. It will rally. The question is when and how far will this drop, but buy into this. But don't buy in right away. Slowly dollar cost average this. The question is, will it stabilize at 4,500? I think it'll break the 4,810 mark today. I think it's going to happen. All right. So please go to my store, help support my work so you can navigate through these types of situations. That's the reason why I set up the show. And you can see we're doing it live. And not just that, you're seeing the real trades happening on the dashboard. Please go to my store, the-studio-reykjavik.com, and help support my work by getting the products that I have. I've partnered up with Rainbow Herbals, and we've created these deodorants that are dual purpose. Now, the market's selling off, so you're probably sweating. So you might as well get a great deodorant from my store, the-studio-reykjavik.com. All kidding aside, this is a dual purpose product. You use it as a deodorant, and it will help to detoxify your body. It's made from essential oils from the Himalayas, extremely high quality ingredients in these deodorants. It has no aluminum, no baking soda, very high quality, all natural ingredients. You can get it in peppermint, lavender, and tea tree, or in citrus. It's for males and females. Get a couple bars for your household, help support my work. If you buy $150 or more on my store, you will get a free gift until supplies last. Use discount 5 and you get $5 off. So get these great deodorants, get a couple for your household, help support my work, and help support your health. This is a very high quality deodorant that you're not going to be able to get at the store. Yeah, you can get cheaper deodorants, but are they as high quality as this? And the answer is no. So please go to my store, the-studio-reykjavik.com. Get these very high quality deodorants that are dual purpose. Use it as a deodorant, but it'll help to detoxify your body. Please go to my store, the-studio-reykjavik.com. Link is in the description of this video and all my videos.
In these times of crisis. So there's probably net selling of funds in general, but ETFs and Vanguard are two areas taking in cash. So if you look at yet Friday, the top 3 ETFs by flow, SPY, QQQ, and VOO.
Took in money?
Yeah, SPY took in $9 billion.
That's arguably the most important thing we've heard this morning.
Yeah, and look, I have a piece coming out probably on Wednesday, which is to explain the superpower of the Vanguard investor. It comes from 2 places, Tom. One, I believe all Vanguard investors have acknowledged they cannot time the market successfully. They've seen too much. The opportunity cost, if you go to cash now and the market rallies, the opportunity cost is great. So people are like, I can't do it. Number 2, they feel like they're in the best fund in the world. I can't do better than a 3 basis point S&P 500, the best country with the best stocks. And so those 2 things kill all fear. Or you could argue they paralyze you in a good way. It's like, just don't do nothing. So I do think the Vanguardian investor, they're just not going to ever do anything. That said, their base of bids is going to be overwhelmed at times by the algos, the institutions, and the outflows from active equity mutual funds. So right now, there's probably net selling from the fund world, but the Vanguardian and ETF RAA types. So it looks like they're staying the course.
Right, this is so important, Paul. I have to summarize. Paul's got 8 questions for Eric Belchunas as the lead on deck. We're commercial free on YouTube. Subscribe to Bloomberg Podcast, humbled by the growth. And to me, the observation that, people Thursday, Friday, like Tucker, he's at his phone. I mean, Lisa Mattea couldn't even concentrate. Tucker's go to cash, go to cash, go to cash. Your big mama ETFs took in money on Friday.
Yeah, 12 billion. So that's 3 times the average. Now, I will say this. There was a little bit of an outsized pouring of money into cash. So Treasury ETFs took in more money than normal. So what I think is going on is that Vanguardian type investor that's like, look, I can't really time the market. I'm just going to keep buying. In fact, I was going to buy 3 months ago when equity prices were high. I was going to buy then anyway. Now they're way cheaper. I'll just buy them for cheaper. But hey, I'm also going to buy a little cash, a little buffer, a little gold, something to hedge to make me feel a little better.
This is what I'm saying. People are buying in. All right. Now, what I think is going to happen is that we're going to break the 4,810. It's going to go down to 4,500. All right. Hopefully consolidate and then start marching back up. That's what I'm hoping. And that last night you started hearing Taiwan wants to eliminate tariffs. So, and have more of a free trade with the United States. That is positive news. And if more countries do something like that, this market will rally quicker. The thing is that news from Taiwan may actually set in motion World War III between Taiwan, China, and the United States. So, this is not just a tariff war. This literally could be a Pacific war. We got to be cognizant of that, all right? And these individuals that are on Bloomberg aren't really paying attention to that dynamic that's happening. That if Taiwan aligns itself as a trading partner with the United States, and the United States is selling military equipment to Taiwan, and China is playing hardball with the United States with tariffs, and they are escalating the tariff war. This potentially could lead to Taiwan being a flashpan for World War III. So they are connected.
Yeah, so I would say advisors make up 60-70%, and they're largely 60-40. Okay. Institutions use ETFs for operational purposes like the liquidity of SPY, they use options, and then you've got their direct retail investors who are doing a lot of the degen stuff. They're the ones buying the TQQ. They're like 10%. Right. But the bulk, the heart of the ETF world is the advisor.
got one more question, because Isabel leaves here, she's already had a tantrum.
And another thing that they're not talking about, not just the Taiwan perspective on this with tariffs and how it could cause more friction between the United States and China, but tax cuts at the end of the year will be passed in Congress. All right, so third quarter, fourth quarter of this year, that's going to be an accelerant for the stock market. So it's time to buy, but don't buy, just slowly buy into it. All right, accumulate, and you will be better off in the long run. Trust me on this. I know it's stressful to deal with, and seeing the markets down 3% and 4%, and each day. All right, but just like I said, I gave you some target points: 4,810, 4,500. Okay, those are key areas to kind of pay attention to for the S&P 500. But buy in. Don't be afraid. Don't bet against America. Never bet against the United States. Ever. Ever, ever, ever. Never bet against the United States.
Postpone this deal until we get some more, steadiness in the marketplace.
Welcome all of you worldwide, commercial free in this hour. Thank you so much out on YouTube. Record audience, really appreciate it. Subscribe to Bloomberg Podcast out on YouTube. Good morning on your commute across the nation. A special good morning to 92.9 FM. I'm trying to get us a remote at the Sevens on Churchill Street.
Yep.
Sure. I think it'd be good. We can, it's a lovely occurrence there. And good morning to 99.1 FM in Washington. She's been patient all day. Isabel called up in the 4 a.m. call. She said, "Can I come on first? Because I got a really good."
Please go to my store, the-studio-reykjavik.com. Help support my work. I'm giving you free information on how to benefit from this market sell-off. Get the structural nano silver toothpaste that I offer. This is the best toothpaste that you can buy. There's no toothpaste out there that you can purchase that's better than this. This will whiten your teeth, freshen your breath, help with your gum line, reduce inflammation, neutralize pathogens, and guess what? With good oral hygiene, you're helping with your vascular system and your valves, your heart valves. Bad oral hygiene will lead to problems at the vascular level and at the valvular level. So please go to my store, the-studio-reykjavik.com. Get a few tubes of this very high quality toothpaste. Has no fluoride. It's made from structural nanosilver. Use it every day. This is something that I've been using for more than 5 years. Please go to my store, the-studio-reykjavik.com. Get a few tubes of this. If you spend $150 or more on any order, you will get a free gift until supplies last. I'm not going to tell you what the gift is, but use discount 5 and you get $5 off on top of that. You get a free gift. You get $5 off. And if you purchase anti-aging boxes or longevity boxes, those boxes that are on my store, those longevity and anti-aging boxes, have a built-in discount comparing it to purchasing the products individually. So it behooves you to actually purchase an anti-aging box or a longevity box. So please go to my store, the-studio-reykjavik.com. Use discount 5, get those anti-aging and longevity boxes, spend $150 or more, and you will get a free gift. Please go to my store, get the structural nano silver toothpaste, get a few tubes for your household, and get healthy.
That there will be a relief and will return to the nirvana we knew 2 weeks ago.
Absolutely
Is anybody
not.
talking that?
Not among the people we've talked to. In fact, what came up a lot is the reverse wealth effect. The past 2 years, we've all talked about the wealth effect, how everyone was feeling happy. You look at your 401k and you feel rich. But now no one wants to look at it. All my friends were really like, that's genuinely sad over the weekend. The 401k is now 201k. And this reverse wealth effect is real, and it's now a significant risk in the economy, according to everyone we've spoken with over the weekend. And there's really no way of avoiding this. They said that this is the positive wealth effect is completely gone. We're in the territory of negative wealth effect. And sure enough, that's why we bring up the average investor class. I mean, sure, top 10% owns almost all of the stocks. But if you're a normal American, you have 50,000 in your 401k, 20% drop on that. It's really significant. I mean,
the question will be, what's the pushback, if at all, either from everyday consumers or from members of Congress, or who knows where, whether there'll be some pushback to maybe moderate some of these policies. But as of right now, the president seems pretty convinced of his strategy and haven't seen any rubber coats suggest.
Are we in, Isabel, go to your team. I mean, to picture this, folks, Isabel has 3 Bloombergs, 12 screens. She's in a row with a bunch of people. They break out the mimosas about 7 a.m. I mean, it's crazy over there in our market coverage. And then Paul and I are doing it with our team and all that. What are you looking at your desk? When you go back and sit down at the desk, you're chained to your desk. What are you looking at on the screen?
Other than markets, the stock market, we're looking at now volume, because even with ETF flows, you just had Eric Bitchute, he's really the ETF flow. Flows are messy because you have people maybe plowing in to hedge or plowing in because they have conviction. So we're looking at trading volume, and you really see people coming into the market.
Are you in tomorrow? You're not work from home?
No.
Good. We'll see you tomorrow. Isabel Lee, thank you so much. Leading our market coverage, cross-asset, an important big take here on the chart of death. Speaking of which, let's do the data check of death. I'm kidding. We've improved the tape in the last 20 minutes. Paul, what were we? Negative 1,400?
Yep.
We're now under 1,000, negative 926 on the Dow. The VIX was a 52.34 into 49.16. A constructive tape into the 10 o'clock hour.
All right, so the ones that are watching the dashboard, you have 4,970 now. Okay? And remember what I said, 4,810 is a support level. So if you're an algorithmic trader, all right, when that market gets close to it, you're buying in. So you're seeing a bounce right now off of that. The low of the intraday trading was at 4,835. Okay, so that's not far off. That's only 25 points off of that support level that I was telling you about, of 4,810. All right, so you're seeing a bounce off right now at the intraday, trading now at 4,974. So algorithmic traders are playing off of that fib sequence. That's why I keep on saying that if you pay attention to what I tell you, you will benefit from this. All right? All right. So the Bloomberg is on commercial, I think.
The Dow is down 919 points, about 2.5% at the open. S&P off about the same percentage after entering bear territory over fears of new Trump tariffs. But the president isn't backing down. Writing on Truth Social today, he admonishes, don't be weak, don't be stupid, don't be a panic hand. He says that's a new party based on weak and stupid people. Correspondent Caitlin Huey Burns.
The message coming from President Trump to Americans concerned was essentially hang tough. But they may be difficult given that those other tariffs are on the way, those even bigger tariffs on the way later this week, which could increase the price of goods for Americans. But through it all, the president has said that he is making clear he is not changing course.
Market strategist Matt Wharton.
It's the extent of the tariffs and the uncertainty with respect to whether or not this is just a negotiation or whether or not these are actually going to be.
Bitcoin is now trading at 78,000. It was trading at 76,000. So there's a little bit, and if you see on BITO on the dashboard, it starts spiking up. VIX is now trading at 48. Let me do a product plug here. I have a health protocol called the Core. It has 4 pillars in it. The first pillar is taking Max 14, Max 35, or Cleanse. All right. Now, what each one, Max 14 is 14 parts per million. Cleanse is 30 parts per million. And Max 35 is 35 parts per million. Take a teaspoon a day, swish it in your mouth, gargle, 20 seconds or so, and then swallow. You're going to improve your oral hygiene. You're going to help with the health of your epithelial lining in your oral cavity and in your oral pharynx. You're going to maintain that mucosal barrier. That means you're going to improve your immune system. So I have them at different price points. The 35 is a little bit more expensive. Cleanse is a little bit cheaper because it's 30 parts per million. And then the max 14 is 14 parts per million, and that is at a different price point. So I have these in 3 different price points to make sure that you can afford doing this every day. It's really important. Do it every day. Teaspoon a day, every day. You're not feeling well, take a tablespoon or 2 a day, and then go back to your maintenance dose of a teaspoon every day. Okay? Every day. That's the first pillar of the core that boosts up that immune system. The second pillar is C60, soak up those free radicals. The third pillar, turmeric, ashwagandha, lignans, bring down inflammation, boost up the immune system. And the fourth pillar of the core is Boomer Boost. And what that does is it boosts up your energy levels and revs up your metabolism. So when you do that as a core and you stack other things to it, you've really customized a really nice anti-aging protocol that will boost up your immune system and help with your other organ systems like your endocrine system. And if you pay attention to how to stack these different supplements, you're going to be able to improve your bone health, your neurons, your endocrine system, your immune system, your cardiovascular system, your gut health. So please go to my store, get the cleanse. That's 30 parts per million, or max 35, that's 35 parts per million, or the max 14, that's 14 parts per million. I have it at different price points because people have different affordabilities, but it's important to take every day. Take a teaspoon a day. If you're not feeling well, take a tablespoon or 2 a day. Please go to my store, use discount 5. I want you to get these products. Use discount 5 and you get $5 off. If you spend $150 or more on my store, you do get a free gift until supplies last.
Is over. Dodgers win.
They won during President Trump's first term. Several Black and Latino players boycotted the trip to Washington. Even shortstop Mookie Betts, who skipped in 2020, says he'll be there today. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are 2 big-time blue-chip companies.
The window between peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming also on YouTube, so head over to youtube.com. The Bloomberg Podcast, that's where you find us. Sell-off continues again today, although we are off the lows. Coming up, we're going to check in with Sri Natarajan, Bloomberg News senior finance reporter, and his thoughts on these tariffs. What's it feel like on global Wall Street? Amy Diamond's out with a letter with some comments on the tariffs. We'll break that down as well. James Abate, Managing Director and Chief Investment Officer at Center Asset Management, get his thoughts on these markets. And Matthew Palazzola, Bloomberg Intelligence Senior Analyst covering the insurance business. We'll talk about, is that a place to hide out there in a market that is selling off here? Kevin Tynan, Director of Research at the Presidio Group, to discuss the impact of tariffs on the global auto business, continue to wait on the auto stocks, including Tesla. So we're checking with Kevin Tynan, formerly of Bloomberg Intelligence. Right now, let's get a market check. We'll do that with Mr. John Tucker of Bloomberg Business.
All right, best I can say at this point, we are off the worst levels of a bad session. The S&P 500, though, still flirting with the bear market territory. All 11 major industry groups in the index, they are down right now. Worst performing stocks, they belong to Genuine Parts, auto parts company there, down close to 7%. And then Nike again, They make their stuff in Vietnam. Nike shares, they are down 5.5%. Now, overall, the S&P 500 down 2%. And we are being brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more. And your timetable, learn more at ibkr.com/around the clock. The Dow Jones Industrial Average down 958 points, again off the worst level of the session. The Nasdaq 100, 252 points lower. That is down 1.5%. Hardest hit in terms of percentage, the Russell 2000 of smaller domestic stocks, that is down 2.5% right now. As for the yield space, the 2-year pretty much unchanged at this point at 365. The 10-year yield is actually higher. That is up 6 basis points at 4.05%, which leads to the question, where is the money going at this point? And a warning from Dennis Gartman earlier today, the economist used to run the Gartman letter, saying that around 10 o'clock or so, you might see some more poor selling with margin calls. And we check the markets for you all day long, right here on Bloomberg Radio.
That's a good point.
That is your Bloomberg.
That's a good point that I haven't mentioned to the audience. Some of these institutional investors are ones that are very heavily leveraged. If the market keeps on selling off because they've bought positions on margin, then they may be forced to liquidate. So you may actually see some market participants trying to get the market up by having inflows coming in to prevent their margin call. All right. But if it breaks and those margin calls are triggered, then you're going to have you're probably going to see that sell-off. And that will probably be a catalyst to break the 4,810 support level and then go down to 4,500.
Economic Armageddon unleashed by Trump is a complete disaster for Apple, given its massive China production exposure. And as we know, Apple really sources majority of its supplies and equipment and all of those from China. And recall that the tariff rate slated for China is at 54%. Taiwan, where it gets a lot of those, is also 32%. So those two would really be devastating to Apple, its cost structure, and ultimately consumer demand. But here's a catch. I still have an outperformance rating for Apple.
I mean, yeah, you still have
That's his brand.
Yeah, it's his brand for sure. But the details there are quite striking. Dollar Tree, let's go through here. This also is getting some analyst comments today.
But I like Dollar Tree because it's inching higher by almost 8%. Citi basically turned bullish. So Citi anticipates that the higher across-the-board tariff will be positive for the discount retailer. And I got excited when I was reading this story because most of the tariff effect is on the negative side. So Citi says that the higher across-the-board tariff will be positive because he said that they added the price target. If Dollar Tree basically increases from $1 to $1.25 or $1.50 or $1.75, it will seem inevitable, but consumers will be, quote, accepting of the magnitude of change. And he acknowledges, though, that around 50% of the company's product is subject to higher tariffs, but still, he says that he believes that they can overcome this. He changed price target to $103 from $76. And the company may benefit from consumers also trading lower, so maybe more people will go to Dollar Tree.
All right. S&P 500 has now surpassed the 5,000 mark. It's 5,054 now. So you have institutionals coming in, buying.
Proxy of Bitcoin, basically they're edging lower by 9%. MicroStrategy said, it will register an unrealized 5.9 billion loss in the first quarter, and that's after they adopted this.
And what's interesting for the ones that are watching the dashboard, what's interesting if you look, there's a strong correlation between BITO, which is the long Bitcoin ETF, and the S&P 500 SPX. All right, as SPX increases, BITO increases. So there's a direct, at least in the intraday, there's a direct correlation between Bitcoin and the equity market. But be careful that, this market can swing negative really, really quickly here. because you have inflows that are coming in from institutionals, and then once they're buying, it elevates the price, and once they stop the inflow, then the price starts to drop again.
Turn of the calendar year into 2025, animal spirits. And nowhere did animal spirits run more rampant than on global Wall Street. Let's get some deal making. We're going to have the easy money. We're going to have less regulation. We're going to have pro-business policies.
Capital markets going to be wide open.
Yep, and let's go.
And another thing for the ones that are watching the dashboard, take a look at the USD and Japanese yen. Notice that it's spiking up. So that means that the Japanese yen is weakening, the dollar is strengthening. So as the equities are moving up, VIX is moving down, and the USD Japanese yen is moving up. So this is part of the reason why I use the USD Japanese yen as an overall market risk indicator. So as it's going up, that means less risk is there's a depressurizing of risk in the market. Less risk building up if that number keeps on going up. If it went up to 150, that's a good sign. But it's not going to go to 150 anytime soon here. Not today.
Trump, or the man who was campaigning to be president, seriously, when on the campaign trail repeatedly he talked about his decades-long desire to change the global trade order. Tariffs are not something that's an idea that's been injected in Trump's head in the last week or 2 weeks or a few weeks before that. He's been talking about that for nearly 40 years. The problem was Wall Street refused to take that seriously. Now they're being forced to confront it, and the reaction hasn't been great.
And Jamie Dimon talked about in his letter, right, that there could be irreversible damage if it's not sort of turned around or changed relatively quickly. What did that entail? What was that really speaking to?
And to me, it was interesting that Jamie said that. Again, his annual shareholder letter, something that people look forward to, not necessarily the Warren Buffett letter, but with his stature as the elder statesman in the banking sector, every time Jamie Dimon has something to say, people pay attention. It's a 60-page missive, so most of it was written weeks and months in advance. But there was a lot of changes made in the last 48 hours, and the one that we're all drilling into is his commentary on tariffs. And he's clear there that the longer this goes on, the negative impact will be cumulative. And that's what a lot of people have been talking about. Even if you start trying to change course, you try to negotiate. There was a commentary from a Goldman partner over the weekend who said it's really hard to put the toothpaste back in the tube once it's out. And that's the concern for Wall Street. If you are taking away the critical ingredient that businesses
market session lows for the S&P 500 was trading at 4,835, above the 4,810 support level for the fib sequence. And now the market is trading at 5,173. So there's definitely inflows coming in. And I suspect that algorithmic traders and institutional investors wanted to go in because it was about to trigger that 4,810 support level.
Cares anymore because we do not want to know what they did between Jan 1 and March 31st. Everyone is paying attention to how badly they will be hit going forward. Morgan Stanley is out with a note today downgrading the entire banking sector. And the breakdown there is interesting. They talk about how someone like a Goldman Sachs, you will see the immediate impact because the twitch reaction in capital markets and deal making is just, it's a snap. You see it, it's evident with respect to slowing down of loan growth in consumer books and banks or consumers falling behind on their loans. That is still something that's out in the future. And perhaps, if you're able to somehow navigate through this tariff, whether it's a negotiation, not a negotiation, whether he goes away with sort of the worst case scenario or dials it back.
We were 4% down on the S&P 500, and now we are 2% up. Now, like I said, this market can continue to go down. We may have a market rally today. I suspect that it will go down further. All right, but don't be fearful. Buy in. Don't be fearful. Buy in. My thesis on this is that once tax cuts are passed in Congress, the market is going to rally above the high point of the S&P 500. All right. Do not be fearful. Just buy into the market. Don't buy in completely. Just buy in over time, right? As dollar cost average into this, right? But don't be fearful. If you're fearful, you're going to miss out. And I understand you're fighting a natural instinct. The natural instinct when something is fearful is to run or to protect yourself. But you have to think the opposite when it comes to financial markets. It's not easy to do. I get it. I totally understand people get fearful, but don't be fearful. Buy in, stay calm, just understand where this potentially could go in terms of probabilities, but this is going to be beneficial for you in the long run. And when I mean the long run, in the next year, 2 years, 5 years, 10 years. All right? Just don't be fearful. But tax cuts coming that will pass in Congress this year is going to be an accelerant for a rally in the broader index. Okay. All right, what I'm going to do is I'm going to go to Times Radio, and they're talking about things are bad. Global recession warnings as markets react to Trump tariffs. This was published 4 hours ago.
Down. Roughly 37% of pilot.
Okay,
The
so
U.S. has decided to stop.
all right, so Times Radio is spun it where Trump's tariffs is going to cause a recession. All right, but before we do that, please help support my work. I'm doing this for free so people don't get fearful, how they can benefit from what's going on. I'm giving you real numbers to actually, to hang your hat on, like the 4,810 support level on the fib sequence. But please help support my work. I do all this stuff for free. All right. So please help support my work by going to my store, law-studio-reykjavik.com. Get the probiotics that I have. I have it in a veggie cap form or in a powdered form. I prefer the powdered form because I take a lot of different powders for my supplements. I take collagen and Boomer Boost and Gladiator Barley and lignans and, and the probiotic. So I take a lot of different powders. So it's just easier for me to take. I take it for my lunch in soft foods like hummus or yogurt. So get the powdered probiotic or the veggie cap probiotic. It's really important to improve your gut biome. Why? It'll allow you to absorb nutrients better. You'll reduce inflammation, so you're going to have a healthier gut. You're going to improve your immune system at the gut level because your mucosal lining will be improved. You'll have the proper microbiome in the gut. Your IgAs, which is a type of antibody, are going to be prevalent within that mucosal lining of your gut. And that means that your immune system is going to be improved. You'll have less inflammation. And with less inflammation, you're reducing the chances of having mutations in the crypt, which is where your cells, your adult stem cells are to create new cells for the gut, because your gut sheds lots of cells every day and it has to replenish. Well, if you get mutations in the crypt at those adult stem cells, then guess what? You start getting polyps, and that's a big problem. And that's the reason why you have to do cancer screenings, especially, post 2020. Really important. All right. My aunt died from colon cancer. So, and the reason why was because she didn't want to get proper cancer screenings. So she did it to herself. So don't fall into that trap. Do your cancer screenings. But not just that, it's about proper gut health. All right. And with good gut health, you're going to have better metabolism. You're going to have better communication between your gut and your liver. Your gut and your liver communicate. All right. So to have good liver health, you need good gut health. Also, to get proper sleep, less irritability, having a good gut is going to help with your brain function. In addition to that, it will improve your skin, your hair, and your nails. You can take a look at a patient And you'll notice that if they have a bad gut, you can see it in their skin, their hair, and their nails as a sign, as a symptom of a more problematic underlying condition. Trust me, helping with your gut is a great foundation to build off of to improve your health and wellness. So please go to my store, the-studio-reykjavik.com, get the powdered probiotics or the veggie cap ones, very high quality, take them every day, drink them with filtered water, and improve your diet, Stay away from processed foods. Eat more vegetables, Also eat meats, but eat higher quality meats. And don't overcook them. If you burn your meats, especially red meat, that could be problematic. All right. But the thing is that, I'm not, one to say just eat vegetables. No, you need to eat some meat too, but the thing is that it's proper diet, proper exercise, proper supplementation is my point. All right. Filter your water and stay away from processed foods. Processed foods have lots of chemicals in it, and your body doesn't want that. So please go to my store, get healthy. If you spend $150 or more, you will get a free gift until supplies last. Use discount 5 and you get $5 off any order. So please use that discount. I want these products in your hand because they're very high quality, and I want you to be healthy in 2025. All right, let's go to Times Radio and how they are spinning the whole Trump tariff into some sort of potential global recession.
And I don't see why the rest of us have to do that.
The world has changed, and Trump's tariffs are not just a phase. That's the Keir Starmer's assessment this morning, and the government says they're speeding up their growth plans as a result. US President Trump told America to hang tough in the face of falls in the market. The White House also says that more than 50 countries have reached out for trade talks since Trump's tariffs announcement. What impact?
I apologize for interrupting here, but now the S&P 500 has turned negative. So it opened up, at around 3% or so, and then went down to 4%. Then it went back up to 2% positive, and now it's a negative 0.7%, almost negative 0.9%. Foul day.
Our economy and the wider economy. Andrew Murphy is CEO of The Entertainer, the toy retailer. He said the biggest worry about the tariffs is uncertainty.
When we think about the potential for in The Entertainer for purchasing perhaps more goods from China, perhaps at a better price, if one assumes that US retailers won't be buying as many of the goods that have been produced, and therefore they might be available at clearance prices at a lower price, then one has to factor in what's the impact on shipping availability and shipping rates going to be. How long will the product take to get when it wasn't already planned in to be moving from China all the way to the UK? There are different safety standards that apply in the US to the UK, and so we have to put toys through the safety regime. And so while there may be an opportunity for businesses like The Entertainer to produce even better prices for our customers in the UK through picking up some excess.
We just have to make our chatbot more agentic. Whoa, future John here. You're here too? Yeah, and thanks to CX1 Empower, things are going to get way less awkward.
Check it out. At Planet Fitness, you can get free fitness training.
We're mixing it up.
We're not slowing down. I'm checking my form.
55 to 70.
You coming? Save $28 or more when you join for just $1 down, $15 a month. Cancel anytime. Deal ends Friday, April 11th.
The UK through picking up some excess stock. I come back, and then where I started, really just a huge amount of uncertainty, and it will be a number of weeks, I think, before we have any clarity at all. And that, of course, assumes that we don't have moving goalposts in the US in the meantime.
Yeah, and that's not much of an assumption, is it? So Howard Davis is the Professor of Practice at the Paris Institute of Political Science and former chair of RBS, former Deputy Governor of the Bank of England. We can speak to him now. Howard, good morning to you.
Good morning.
How worried should we be this morning as markets wobble? Are we staring down the barrel of a global recession now?
Yes, I think so. it's always dangerous to interpret the markets because they tend to exaggerate moods. But I think at the moment we've got sufficiently significant moves that we have to accept that things are going bad, and that reaction that there could have been to Trump, which as well, we'll all get round the table and we'll negotiate. That's not the reaction. The reaction is that he is serious, he keeps saying he is, and therefore that global trade is going to decline one way or another, and that is going to lead to probably to a global recession, and we will not be immune to that. We can't be.
Is this the end of globalization, do you think, Howard?
Well, I don't think that's a very helpful thing to say. It's a rather US-centric interpretation. The US has decided to stop the world and get off. And I don't see why the rest of us have to do that. So I think that what we should be doing instead is seeking to accelerate discussions on free trade or at least low tariff regimes elsewhere. Of course, the biggest thing would be to get back alongside the European Union, look at the customs union, etc. And I think that that would be, for me, the best direction of travel, rather than throwing up our hands and saying globalization, which has benefited the world massively for decades, is all over. I think that's a very pessimistic and US-centered version of what's going on.
If there were no politics involved, would you say something like rejoining the customs union of the European Union would be a sensible economic response to this?
Yes, I think it would. I mean, it's an easy thing to say and quite complicated to do, because you do need to re-stitch a lot of relationships which we spent a gleeful few years tearing up. But nonetheless, I think that's the direction of travel. When we need the customs union as it currently is described, that would need to be negotiated. But certainly the direction of travel of trying to get back into a freer trade arrangement with the European Union would seem to me to be an eminently sensible response.
Do you think we have to work on the premise that we're not going to get a deal with the US? And that figure that we quoted this morning, 50 countries, according to the White House, are trying to have emergency talks with Donald Trump. Well, even if he had a preternaturally large concentration span, which of course he doesn't, he's not going to be able to manage 50 separate negotiations anyway. It feels like the idea of a deal with the US feels somewhat distant at the moment.
Yes, it's been a sort of mirage on the horizon for a very long time, and we've always found it very difficult to get it over the line. There are big issues like chlorine-washed chicken and hormone-added beef, which the US keeps raising, and we find that difficult to deal with. So a comprehensive free trade agreement, I suspect, is beyond us. It may be possible to agree certain things in relation to perhaps to automotive tariffs that we could improve. But as you say, there are a lot of people bidding for this. And also, of course, one has to note the secondary consequences, which would not necessarily be resolved even by a free trade agreement with the US. As your previous interviewee said, the risk is that because the US is closed to some people, like China, then product gets dumped to us. Now, some people may benefit from that, but other people will absolutely suffer from it. So I don't think even a free trade agreement with the US, which, as I say, I suspect is not going to happen, that wouldn't resolve the disruption to global trade that this set of measures has created.
How bad would dumping be? Because in the short term, it would give us lower prices, which would be anti-inflationary, which might be a good thing. But it would presumably eventually push out British manufacturers, of which there aren't very many to begin with in the first place.
Yes, I mean, I'd be relaxed about toys from China because I'm not aware that we make any of those. So that probably would just be a net benefit. We just get them more cheaply. But things like electric vehicles, that's a bit more tricky. And if you suddenly had a very serious wave of electric vehicles from China at very cheap prices, you can then get to a position where you knock out your domestic capacity and it's very hard to get it back. So I think the government would have to respond to that. And obviously they are tinkering a little bit with the electric vehicles regime today, which may be helpful at the margin. But that's what I think you've got to look at.
One big domestic context today is the rise of national insurance on employers came into effect yesterday, so into effect effectively today. How significant an impact on the economy will that have, do you think? Is that a major factor in everything?
Well, it ought to be priced in, of course, because we've known about it for more than 6 months. And so, it would be odd if it were to have an unexpected impact. It's not helpful.
Why does your morning coffee cost more? Why do your favorite snacks disappear overnight? The answer is because supply chains control it all. I'm Kareem Kafouri, and with over 20 years working with top companies, I break it all down in my book, Supply Chain Ups and Downs. So whether you're a frustrated customer...
It's not helpful because it is taking costs out of, taking money from businesses and reducing employment. But I can't quite see why it should be a lot worse than we expected, and people have had 6 months to plan for it.
And just before you go, you were around in 2008 when there was a huge financial crash. How optimistic are you in that context?
Well, this isn't the same thing. I mean, you can look back at 2008, you can see that the global economy was running too hot, and people had borrowed huge amounts of money, and then when the market turned because of the excesses in the US mortgage market, then a lot of people were left very, very exposed. And the famous Warren Buffett phrase at the time is, anyone the tide goes out to sea is swimming naked. That was very clear, and a lot of people were swimming naked. I don't think that's the case now. Most people got their speedos on. The market was not before this really racing away. People weren't excessively leveraged, I don't think. So I do think we're facing a different kind of recession, and looking back at 2008 is probably not the right way to interpret what's going on today.
Wise words, Howard, and really useful to have your perspective today. Thank you so much for joining us.
Thank you.
He is Howard Davis, the Professor of Practice at the Paris Institute of Political Science, former Deputy Governor of the Bank of England.
Well, at 8:15, let's get an update on the latest on the FTSE 100, which has opened this morning around 15 minutes ago and has fallen sharply. Our business correspondent, Dominic O'Connell, has been watching that. Morning, Dom.
Morning.
What do we make of this? It's down 5% at the moment. It opened, I think, 6% down. Some people suggesting it could be the worst opening since the pandemic, I think. In the context of what we've seen more broadly, how worried should we be about this?
Well, we're in the middle of a proper global stock market rout now. The FTSE is now down just under 6%. That's about 3 times worse than had been indicated by futures trading overnight. Similar pictures on the 2 big European markets, the German, the DAX index and the CAC index. In France, where the trading in shares in French banks has been halted, which is a very unusual step by the market authorities to stop those share prices falling further. They want a more orderly market. And similar things that had been happening in the US over the past week. So this is now a pretty big market move. If you look at the US markets, which are after all by far the biggest bit of the world stock market, they're about 60% by value of the world stock market. They fell by 11% over 2 days last week. There's only been two other times where they've had a double-digit loss in 2 days, which was COVID-19, the global financial crisis that Howard Davis was just talking about, and Black Monday way back in 1987. If they fall by what we think they will fall, the futures indicate today, we'll be officially in a bear market, i.e. 20% fall. What does all this mean? Well, if you have money in the stock market through your pension or through individual savings, then you're worse off this morning. If you take a snapshot of where the market is, the US market is particularly important. About half of all UK pension savings are in the US stock market or in US government bonds. So people who have flooded into the US because of the extraordinary performance of the US stock market have lost money on the back of this. All these markets are pricing in a global recession.
And you mentioned something there, a market halt. Can you just explain to people what that is and what that is in the context of it's happening in Europe at the moment? Is that something that we should watch out for more widely?
Well, I would be very surprised if it happened here, but normally European stock market regulators are a bit more sympathetic to the idea of disorderly markets and things falling too quickly, particularly when it comes to important companies like banks. And we saw it during 2007, 2008, where when it came to financial services companies, the stock market regulators would put a temporary hold on trading in order to prevent very fast falls, to let people just have a bit of a think about things. So the French market authorities have done it this morning. I wouldn't expect it to last very long, and I think it's a bit of an outlier. I'd be very surprised if anything similar happened here. It is interesting to think about what happens next, though, because talking about trade talks, that in the cases of some of these countries, they don't have much to offer Donald Trump in the way of concessions. Vietnam, for example, which got whacked with huge tariffs because it has a huge trade surplus with the US, it doesn't have much in the way of tariffs on US imports. So what are they really going to offer in these trade talks? The other big thing to watch is what happens to interest rates in the US now. If the US economy does fall into recession, there are likely to be interest rate cuts and inflation. It could all get very nasty for the US economy.
Well, we'll keep an eye on that throughout the morning here and, of course, throughout the day on Times Radio. Dominic O'Connell, our business correspondent. Thanks for that.
You called it a proper market rout. We're trying to calibrate our language, aren't you? But I think this is not looking good, and it feels like it's sort of accumulating, isn't it? It started with the Asian markets overnight, the proper market right now in the European markets, and the American markets will open later on this morning, our time. So we'll keep an eye on all of that as we proceed throughout the morning here on Times Radio.
Hey, I'm fresh from the Cayman Islands. I need a SIM, connection, Wi-Fi, something.
Alrighty.
I'm in influence, so I gotta get to the people.
Now we have the Federal Reserve Board. Cottrell speaks amid tariff concerns. So let's go to live now on his presentation here.
It's about 11%. The other peak occurred in 1980 when inflation went above 10%. So those peaks were even much greater than what we saw recently. And those peaks were largely caused by oil shocks, supply oil shocks. Now, in between that period, you'll see that there is a valley. There is a valley of inflation where inflation stayed relatively constant and relatively low. That's known as the period from the late 1980s to 2019, right before the pandemic, as the Great Moderation. And that period basically kept inflation at around 2%, which is our target at the Federal Reserve. So that's essentially what we see in terms of inflation. Now, this recent bout of inflation reflects a combination of inflation in different categories of inflation or subcategories or components of inflation.
All right.
So I want to show you those.
All right. This is more of a lecture that's a little hard to translate that lecture into an audio format for the ones on X Spaces. For everyone that's joined, thank you very much. We are live streaming on Rumble, live streaming on YouTube with the market telemetry, and we're simulcasting on X Spaces. If you have a question, type it in the chat or ask for the mic, and you can be live on the show through X Spaces. But everyone, thank you for joining. All right, I'm going to go to CNN. They are, it looks like they're talking to Ackman here.
The breaking news this morning, we are witnessing the rapid destruction of the market. Stock futures are plunging this morning once again. As the turmoil for President
Just
Trump
before we do that with CNN, we are now negative again with the S&P 500 down over 2%. We're trading at 4,958. Remember what I said, the market must close above 4,810 or there's going to be a major sell-off. 4,810 is the support level. If it breaks, it's going to sell off a lot.
shocking markets here in the United States and around the world. Donald Trump's baseline 10% of tariff across the board, it went into effect Saturday. And also so many countries are bracing for more as the targeted tariffs that he announced are set to kick in Wednesday. So far today, Hong Kong's main exchange dropped 13%. Taiwan's exchange saw its biggest one-day loss on record. And the S&P is now nearing a bear market defined as a drop of 20% or more from a recent peak. Add to that, billionaire hedge fund manager and Donald Trump supporter Bill Ackman is now somewhat leading Wall Street's backlash to the tariffs. calling Trump's tariff plan a, quote, self-induced economic nuclear winter. Also saying, this is not what we voted for. Facing all of this brutal reality, the president and his team are offering mixed messages on a key question in all of this, which is the president willing to negotiate, or are these tariffs here to stay? Here was the president last night on the way back to Washington.
IRS e-file is now open. Snap your W-2 and file your taxes 100% free. Plus, get your biggest refund. Roughly 37% of filers qualify. Simple Form 1040 returns. No schedules except for earned income tax credit, child tax credit, and student loan interest. File now.
Now, I'm willing to deal with China, but they have to solve their surplus. We have a tremendous deficit problem with China. I do want to solve the deficit problem that we have with China, with the European Union, and other nations. And they're going to have to do this. And if they want to talk about that, I'm open to talking.
As Matt Egan starting us off for what is going to be another rocky day. What's happened already?
Well, okay, look, fear continues to dominate financial markets around the world. And make no mistake, this is all about the president's decision to launch a trade war. Now, this is how bad things are. Futures are down 2%. This is actually good news. This is an improvement because overnight we saw Dow futures were down 4% or so, about 1,500 points. You mentioned the Hang Seng in Hong Kong. This was the worst day for the Hang Seng since 1997 when Asian markets were in complete crisis mode, right? And so this is an indication, though, that futures are going to open with the S&P trading just above what would be a bear market, right? Just that 20% decline. Just for some context here, if the S&P closed in a bear market today, this would be the second fastest bear market in history, second only to 2020 during COVID, and surpassing the 1987 crash. Look at this. So this is the S&P 500 so far this year. You can see things were getting a little bit rocky in February and March, and then Liberation Day came last week when the president rolled out his tariffs. And look at this. It's gone basically straight down since then. The S&P 500 lost over $5 trillion in value after Liberation Day. Look at this complete wipeout. And you mentioned, Kate, that we are starting to hear from some notable billionaires. Right. Speaking out, Bill Ackman, who endorsed Trump and has been a very outspoken supporter of elements of the Trump agenda. He is basically pleading with the president to change course. He put out this tweet last night. He said,
a lengthy statement, yeah.
It was. Most of his are. But he said that the president has an opportunity on Monday to call a timeout and have the time to execute on fixing an unfair
tariff
system.
So this news came out last night. You know, with Ackman saying, well, maybe we need a 90-day hiatus, and the problem is that if you keep on kicking the can down the road, it's only going to get worse. Because if you have to institute tariffs again, then the market's going to view that as uncertainty, and it's going to sell off even more. So it's better off to just get the news digested through the market, have the sell-off happen. You start dollar cost averaging into this lower price. And then when the tax cuts start to get passed in Congress, you're going to see the market rally. If you do this 90-day thing, all that's giving is people that are institutional investors that may be getting margin calls, or hedge funds that may be getting margin calls, that gives them an opportunity to get a little bit of oxygen over those 90 days to be able to scrape some money and support their particular position just in case the market falls again. That's all that is going to do. So Ackman's wrong. Ackman's wrong on this. Just take the pain now. Take the pain now, and it will be much better later. You push this off 90 days, and then you're not going to benefit at the end of the year. You're going to be benefiting in the second quarter of next year then. It's stupid. Just take the pain now and let it rip. So I totally disagree with Ackman. We need to solve this globalization problem.
A self-induced economic nuclear winter, and we should start hunkering down. And Kate, we may find out in the next few hours whether or not the president is going to heed these calls.
I mean, according to his team, they're coming. This 90-day pause that he's asking for, there's no sign of it yet. Stand by, stand by. And you have some context also, just putting
the experts also some of the experts in Asia that were talking about this very subject. They were saying that you're better off just having the market digest this the next 10 days than to push it off another 90 days. It's only going to make it worse if you push it off 90 days. Because that's the issue that we had. He signaled in January, and then he signaled in February, he signaled in March, and then he instituted it in April, and now you have this major sell-off, even though you were given 4 months to prepare for it. The same thing's going to happen because the market's going to go, oh, maybe he's not going to do tariffs because he put a 90-day reprieve on it. Because these market participants are going to be too optimistic. So it's better to just take the pain now.
Into historical context in terms of the market.
Yeah, it's been atrocious, right? So the S&P 500, since the president was sworn in, has lost 15% of its value. This is the worst start to any presidential term.
Let's talk about how the market was overvalued. All right. There was the AI build out and, overhype. That's part of it. When you're trading more than 15 times earnings, that's an overinflated economy. Now you can, for a couple of years you can do that. But the thing is, eventually the bubble bursts. This is actually healthy what's happening with the stock market. When you have stocks trading at multiples of 19, 20, 22 times earnings instead of 13 to 15 times earnings, the bubble is starting to burst. Okay, so what we're seeing is something very healthy. But don't be fearful, buy in. Don't be fearful, buy in. Don't bet against America. Don't bet against the United States ever, 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 ever in your life. Because if you do, you will, in the long term, you're going to notice that you picked the wrong decision. Don't bet against the United States. We're going in the right direction.
S&P 500 launched back in the 1950s, and again, this is being driven by recession fears. We heard Goldman Sachs overnight came out and they bumped up their recession odds. They now say a 45% chance of a recession, although they said it would go even higher if the tariffs kick in.
So guys, I mean, this morning, it's the real fallout and the...
Remember what a recession is. Remember what a recession is. 2 quarters of negative GDP. I don't think we're going to be officially in a recession. I don't believe it. But the globalists that actually pay CNN, because these multinational corporations like Cargill and GE and Lockheed and Martin and all these different large corporations, they advertise. You don't advertise. Middle class America doesn't advertise on CNN. So when they make these programs, are they going to try to scare the middle class to think that a recession's coming and to think bad about Trump's policies when those policies are actually targeting and hurting multinational corporations? Because the multinational corporations have been playing labor arbitrage for the last 35 years and shipping your jobs overseas. Do you think CNN actually cares about the middle class? Or do they care about who's writing their checks for advertising dollars? And who are they? Multinational corporations that are going to be hurt financially with these tariffs. Trust me, move forward. Don't bet against the United States. We are moving in the right direction. There will be some pain here, but we will prevail. No doubt in my mind about that.
And then there's the political impact of it, which is a real big question mark right now. markets. And then this, I don't know if this is an inkling of what is to come in terms of political impact, Mark, but you now have Wall Street titans weighing in, like billionaire hedge fund manager Bill Ackman. He supported Donald Trump in the election, and he's now somewhat...
Because he's worried about a margin call, and he needs 90 days. That's why.
In the way of Wall Street's pushback on these tariffs. He put out a lengthy social media post in part saying, this is not what we voted for, and we are headed for a self-induced economic nuclear winter, and we should start hunkering down now. Do you think?
Yeah, and they didn't. They didn't add in some of his other comments, like he's buying into the market.
Change his mind to the White House?
Well, it's interesting that he is relaying his concerns via X, right? You know, as opposed to picking up the telephone, and maybe he did, and called President Trump. But the reality is that this is how people are communicating with him. This is how they get Donald Trump to move a certain way. Ackman is now up again, putting out more messages. Last night, he criticized Howard Lutnick, the Commerce Secretary, saying that Lutnick's firm benefited financially off of the economy imploding. This morning, he's now taken that back and said, listen, I'm just really frustrated about what's happening. We've made such great economic gains. But as you talk about apprehension and frustration and, you know, us looking at our 401ks, the likes of Bill Ackman are looking at their portfolio collapse.
Margaret, one of the things I'm noticing the trend now.
Yes, his portfolio is hurting, but he has cash on hand. He's a little bit worried on certain positions that might have a margin call. But the thing is, he's buying in. He mentioned that. He's taking the opportunity to buy into the market. Now, does that sound like a person that thinks that it's really going to be a nuclear winter? If it's really going to be a nuclear winter, why would you buy into the market? Trust me on this. The tax cuts that will be passed will be a major accelerant for a rally in the S&P 500, in the broader index. Now, I'm not a big fan of individual stocks because they're idiosyncratic. They're individual risks that are hard to model. It's better to buy into a broad index like the S&P 500. Now, if you want to be a little bit more risky, you know, buy into an index that's more on small caps, but that's not the point here. The point here is diversify your risk with a broader index. All right? Don't try to play hero. Just be smart. This is going to benefit you in the long run. Now, if the market starts to deteriorate, the Wall Street wants the Federal Reserve to lower rates. I don't know if they will. I personally believe that if unemployment rate is below 5% and inflation is above 2%, if the Federal Reserve lowers rates, that's a bad thing because that would be inflationary based on modern economic theory. All right. But if they do lower rates, it will be a rally for the market because that's what the Wall Street wants. Wall Street wants the Federal Reserve to lower rates, and they're going to plow in that hot money into the stock market. So you have two high potential possibilities that are going to happen in 2025. At least one rate cut, which I think is a bad idea, but it's very possible it happens by the Federal Reserve, and the tax cuts. Those are two major accelerants for a rally in the stock market. That's why it's time to buy. But you got to take the pain. You know, be like a Warren Buffett. Pretend Warren Buffett, you got lots of money and you're just buying into the market as it's selling off. All right? Don't you think that, you know, he has Pepto-Bismol on his desk and he's, you know, down in Pepto-Bismol because, you know, he's trying to catch a falling knife? But almost always, if not always, he benefits in the long run when you do that. Don't be fearful. Go into the firing. Go into the fire. Go into the burning building. All right? Don't be fearful. Most people are going to fear. And when they're fearful, they're going to sell. And you're going to take advantage of the people that are being fearful. And then what's going to happen is that you'll benefit in the long run. the instinct is that if there is danger, run away from the danger. That's how evolution happened for us. All right. That's how we survived as a species. That if there was danger, that you run and you survive another day. All right. But that's not how making money works. Making money works the other way. You make money by taking risk, not running away from risk. Running away from risk makes you poor.
Is that President Trump is talking about it, right? On Saturday, he put out a Truth Social post saying, hang tough, it won't be easy, but the end result will be historic. On the plane back on Air Force One last night, he said, sometimes you have to take medicine to fix something, with the administration, of course, continue to, send mixed signals on what exactly that means. What do you think of that message from the President of the United States?
Kate, it's interesting. My colleagues Jim Vanderheide and Mike Allen wrote this morning, and I actually think it's the right framing for it, that usually you think of President Trump as trying to make a deal, and in this case, he's trying to make a point. So he's trying a series of different messaging that suggests that he intends to dig in, and that he's just trying to figure out what's the best way to do it. Can he play golf and show everyone if he is not worried they shouldn't either? Is he telling everybody, this is going to hurt for a while, but it's going to get better? Is he going to use a medicine analogy, which is interesting for a person who says everybody should have the right to decide whether or not they want to take the medicine? So I think he's trying a lot of different messaging here, but it's because of the pushback that he's getting, not just from the markets, but as you mentioned from Wall Street. We saw this morning Jamie Dimon, the CEO for JP Morgan, warning in his letter to shareholders that he believes these tariffs are going to significantly slow the U.S. economy, which already is facing pressure and weaken, and that it could drive inflation. You've got AEI, the conservative think tank, over the weekend putting out, you remember that formula that the White House released to explain the rationale for the tariffs, putting out a statement saying that actually the formula is wrong, that they used the wrong variable for import prices, and that it will create something like a 4-to-1 ratio and how bad will feel the tariffs. So if the president truly intends to dig in, he is going to need a series of different messaging tests to see what can assuage different parts of the U.S. Some will be regular Americans who have very little extra money to cushion the blow of this, and some of this will be multimillionaires and billionaires who just don't like it.
Yeah, and so then, Mark, the question, one of the things, a factoid that Matt...
Tariffs are going to hurt, short-term, the middle class. Most likely. But it's possible it doesn't. But bringing back jobs and adding economic clustering long-term is going to be beneficial to our economy. Not only that, it's going to allow family creation and individuals coming out of high school and out of college to be able to buy a home because they'll have jobs. There are many people that are coming out of college. They have to move back into mommy and daddy's house. Why? Because they can't find a job, even though that they went to Carnegie Mellon or Harvard. You're talking about elite institutions. And it's not because they just got a humanities degree. These are people that actually have AI degrees. All right? I'm telling you, the economic clustering is not healthy in the United States. And for people that are younger, it's harder for them to get into the job market and be able to have the ability to start a family or buy a home. That was not the case for the baby boomers or the Gen Xers that wanted to further their career and that were go-getting. If you had the will, there was a job out there that you could plug into and have a great career. That's not the case anymore. And the reason is because of fucking NAFTA. About 35 years ago, all right? 35 years ago, we started shipping our jobs to other countries. And slowly over time, those 35 years have eroded the economic cluster. Now, I'm not wrong on this. I know a lot about finance. I know a lot about economics. I know a lot about medicine. I know a lot about engineering. I know a lot about a lot of stuff. And I'm telling you, the globalists have the most to lose on this. And because they own the airwaves, they own the media, they're going to demonize Trump and get you scared. Don't be scared. Do not be scared. Move forward and prevail.
Told us this morning, which is something that Trump pre being committed to tariffs in this way would care a lot about, which is that this is the worst start to any presidential term since the S&P 500 launched in the 1950s. And then it's what is Congress's role here? Here's how Punchbowl put it this morning. Senate and House Republicans are beginning to panic, although we don't think that Congress will pass a bill to take.
I'm gonna. Did they look at the logarithmic returns, or do they just look at non-logarithmic returns? Because those are two totally different things. Because logarithmic returns will allow for scales to give you an idea of what's really going on. Let me give you an example. When the stock market starts to go up to like 10,000 or whatever, all right, and you have a 2,000%, 2,000 point decline, that seems like a lot, all right? But if you have so that's 20%, right? That's 20% decline. But if you look at, let's say, a stock market at 5,000, all right, and it's sold down to 2,500, all right, or let me use a better example. Let's say 1,000, and it's sold down to 500. That's a 50% decline. But the number of points, the point decline, is less. So it's a fallacy when you go the largest point decline. That's why you want to look at logarithmic returns, all right, to get a better idea of what's really going on with the whole scale of the data set. But that's a little too advanced for CIA, because they want to scare you. Don't worry. Buy in.
Power away from the president, and B, it's an open question as to whether the Hill can have any influence at all with the president on trade policy. It's an interesting moment for Senate and House Republicans. I mean, in Congress in general, which typically has the power, has tariff authority. What do you see happening on the Hill?
Well, this is the problem about giving too much power to the executive, right? Because the Republicans are in control of the House and control of the Senate, but they've ceded all authority to President Trump so far in just about everything. So when they feel like they have to step up, it only makes it more difficult for them to do so. However, if we are to believe the likes of Howard Lutnick and Peter Navarro yesterday on the show, saying that basically these tariffs are here for a pretty long time, and it's not going to be changed overnight. That means that you're going to see members of Congress going home every weekend now into the summer, and they're going to have to listen to their constituents, and that's when all of this blows up.
If they are a strong Trump supporter, they are going to view this as a duty to win a globalization war. Globalists are attacking our livelihood by gutting our manufacturing and reducing our prowess, especially for our military. If you can't make stuff like ships, do you think you have a strong military? The answer is no. All right. Now, if they're a weak Trump supporter, a non-Trump supporter, they're going to be complaining to their congressman. So the congressman's worried that they're not going to get reelected if their seat is up for the midterm elections in 2026. But what they're really more worried about is the well-heeled lobbying group talking in their ear, telling them they don't like the tariffs, and that if you don't push back on Trump, we're not going to fund your campaign. That's what they're more worried about. They don't. You think the congressmen and the senators really care about middle America? No way. They care about who's going to fund their campaign. And it's the globalists that fund their campaign. So there's going to be an infighting that's going to be taking place between the Republicans and the true MAGA movement. That's we'll see who where their true heart is. The right thing to do for this country is to kill globalization.
Trump. It doesn't just affect his ability to get anything through regarding the tariffs. It could affect his ability on getting anything through at that point, because then these members of Congress, these Republicans who are in some very difficult races, it's every man for himself, every woman for herself. So they're going to have to do what they have to do to make sure that they get reelected, and that may not be supporting Donald Trump.
Yeah, I mean, you can put money on the.
So let's get this straight. Let's get this straight. As long as they get reelected and we just keep the globalists happy and keep gutting American manufacturing and gutting our military, it's okay. That's what the representatives are saying. Implicitly. That's what this guy on CNN, CIA just said. They only care about themselves. They don't care about the country. Now, think about that. Let's say you're one of the commanders, or you're a soldier with George Washington at Valley Forge, and it's really cold, like the coldest that you've ever been in your whole fucking life. And you're there day in and day out, freezing. And some people are dying from the cold. And you have the ability to just give up and go home. And you have others that didn't and stayed the course. Now, which ones do these CNN representatives seem to align with? The ones that went home, or the ones that actually had the fortitude to stay? And that right there, in a nutshell, is what America's all about. You're at a crossroad, and you keep on fighting. You don't give up.
Congress first, before obviously it would hurt Donald Trump if you carry on the tradition of what we've seen, which is Teflon Trump for so many years. That's going to be quite a dynamic.
Stop letting handover be a headache with Kahua's asset-centric approach. You gather accurate asset data as you build.
Beware of people that only look at their own finances, or their own self-worth, or their own variables, and they don't care about the larger society or what's happening to the next generation. Because you got lots of people that are making money right now. Well, maybe not right now, but during the whole globalization arc. But they basically gutted the ability for the younger generation to have good paying jobs when they get out of college. Yeah, there are some that are out there, but nobody as prevalent as they were for the baby boomers or for Gen X. Not even close. Not even close. Self-centeredness will lead to a falling to society. All right, let's go to Bloomberg. But before I do that, I'm going to plug a stack here that's really important. Take the multivitamin. This is an easy to digest multivitamin. This multivitamin has the multivitamins that you need as cofactors for enzymatic activity, really important for your cells. All right. A lot of people don't realize that taking a multivitamin is super important to make sure your cells are performing the way they're supposed to perform. All right. And that's because they're cofactors for enzymatic activity. So take this multivitamin as a great foundation for the health protocol. Now, stack it with olive leaf extract. Why? Because olive leaf extract is a dual purpose product. So you're getting the multivitamins that you need for the proper cellular activity, but the olive leaf extract is going to help with your cardiovascular health and your immune system. So olive leaf extract helps with the immune system and the cardiovascular system by bringing down inflammation. When you bring down systemic inflammation, that's going to help with your immune system. When you're bringing down inflammation at the vascular level, that's going to reduce the chances of plaque buildup. Olive leaf extract also helps with your lipid profile. That means that your total cholesterol is going to improve. It's going to help increase your HDL and lower your LDL. When you lower your LDL levels, you're reducing the chances of plaque buildup. Why? Because LDL that's oxidized becomes plaque in your vascular system. Inflammation starts, you get free radicals, the free radicals oxidize the LDL gets into the blood vessel, you have macrophages that eat up the oxidized LDL and turns into a foam cell, hardens, and now you have plaque. Voila, it starts to grow, that plaque, you start to have less blood flow, and eventually you have a heart attack, and then you die. Do you want that? It behooves you to listen to me. Please go to my store, the-studio-reykjavik.com. Get the olive leaf extract. It's a dual purpose. It's going to help with your immune system and your cardiovascular system. And take the multivitamin for the proper cellular activity that you need because they are cofactors for enzymatic activity. All right? It's a great base to start with. It's a great stack. If you purchase $150 or more on my store, you get a free gift. I'm not going to tell you what it is until supplies last. All right? So take advantage of that. Use discount 5, you get $5 off. If you buy an anti-aging box or a longevity box, they are cheaper. I've designed the boxes in such a way at different price points where it's actually cheaper to buy a longevity box or an anti-aging box than purchasing the products individually. So take a look at those, especially the cardiovascular box. All right? There's many ways to save money and to get healthy. My protocol works. All right, so please go to my store, the-studio-reykjavik.com. It's something that I do, and obviously the ones that have been watching me for the last 5 years, 10 years, they notice that, wait a minute, Dr. Paul Cottrell is not aging. Is he a vampire? No, I'm not a vampire. You know why it works? It's because I have a health protocol and a supplement stack that is cutting edge. So just follow my lead. Please go to my store, the-studio-reykjavik.com.
Stands fine in theory.
Oh, no. Yep, that's absolutely right. Hey, gold finally suffering a little bit of weakness here after that strong run higher it's had. Mike, what do you make of gold here now below $3,000 per ounce?
Profit taking, backing up in a decent bull market. I mean, below 3,000 is the first kind of trigger for, I think, the responsive buyers to get back in. 2,800 is very good support. I think gold's just a decent bull market to continue higher. Did the same thing in 2008 when we had a decent route. Managed money net positions were really long, but it's a pretty enduring bull market. Gold ETF holdings have started to rocket up higher as people are seeing what's happening in the stock market. So I think it's a dip in the bull market. And this question what might not get up a little. The key thing I want to point out is versus the treasury market, like the GLD, which is the one most widely traded gold ETF, versus the TLT, which is the most widely traded bond ETF. Gold's very expensive versus bonds. So I think it might, if we get more deflation in the stock market, it's going to pass that baton of deflation and risk asset appreciation to the U.S. bond market. But we'll see how that one works out.
I actually think I had a dream about gold. I don't know what that means in terms of it being at a top. I was like, oh, the devil's to 4,000. Maybe I should buy here. Full disclosure, I don't own gold. I can't because I work here. And I talk about it. So I don't know, if I'm having a dream about gold, that feels like the sentiment is kind of way over the top. When does the selling become more of a I sell stuff because I gotta versus that I want to versus I don't want to own gold anymore, I want to own something else?
Well, that's the key thing. We've seen some gotta selling in gold. You have to sell what you can, not what you wanna. I think the key thing to think about is that most of the gotta selling we should look forward to is in cryptocurrencies. They've been a major competitor to gold. Remember, the biggest ETF launch last year was in Bitcoin. They pumped it up, and we all realized it's less digital gold and much more leveraged beta. As that continues to tilt lower, I mean, there's still a lot of speculative accesses and things like Ethereum and Dogecoin and all that. Then I think that makes gold look more attractive. But right now we're in that transition. I think it's more like the beginning of 2008.
And that's the way I see it. Is the bottom line is the U.S. stock market is so expensive. Gina Martin and Anna Wong are still quite bearish. And I think is what happens in bear markets, you get sharp short covering rallies. But in terms of gold, I think it's going to be, by then, let's put it this way. This year it's up 15%. The stock market's down 15%. I think by the end of the year, that spread continues wide. Going up, gold going up, stock market going down.
All right, Mike, thanks so much. Appreciate it. Mike McBone, Senior Commodities Strategist for Bloomberg Intelligence here. Red headline just crossing the Bloomberg terminal. President Trump threatens 50% additional tariff on China starting April 9th. So we'll have some more reporting on that.
What would that be? Would that be like 85%
I
tariffs?
don't know how the math works there, but we'll have more reporting on that. But it just, I think it goes to show, not only in response to that report that maybe he was considering pulling back on some of these, not only is he not considering pulling back on some of these tariffs, but he's putting out there in a statement that he's maybe thinking about taking them even higher on China.
He puts this on Truth Social. He says also that all China meetings would also be terminated along with this 50% additional tariff on China starting on April 9th. He is saying also that negotiations with other countries are taking place immediately. So take that as you will. We are also
okay. So all right. So Trump's 50% additional tariffs on China starting on April 9th. The equity market now for the S&P 500 is trading at 4,987. Again, if we trigger that 4,810 in the close, if it closes below that, there's going to be an additional sell-off. There's a major support level at 4,810, so that has to hold. So obviously, the news coming from Trump is not positive for the equity market. The VIX index spiked with that news at 51, and the Japanese yen is trading at 147. Again, if the Japanese yen breaks 140, if it trades below 140, that's a major risk problem in the financial markets globally. All right. So see what's happening with Al Jazeera here for a second. Let's take a look at here. Unfortunately, it would have been nice to actually have this Federal Reserve lecture, but it's not conducive for this show. Okay. While we're waiting for Bloomberg to recycle, an Israeli drone strike has hit a tent housing journalists. So let's go to Al Jazeera here for a sec.
Forces against journalists and to work towards putting an end to them.
The Palestine Red Crescent is demanding an independent investigation into the Israeli killing of paramedics in Gaza. 15 emergency workers were shot dead last month near the southern city of Rafah. A video has emerged disproving the Israeli military's account of the attack that shows them in uniforms and clearly marked ambulances with their lights on, being fired on by Israeli soldiers.
We as the Palestinian Red Crescent Society call on the world first to form an independent and impartial international commission of inquiry. We have also asked the same to the Security Council to look at the circumstances of the deliberate killing of ambulance crews and to hold those responsible for these flagrant violations of international humanitarian law accountable.
All right. Please go to my store, the-studio-reykjavik.com. Get the lozenges and the drops. We're going into the allergy season in the United States. The lozenges are larger than the drops. You get 21 in each bag. You can get it in elderberry zinc and also in manuka honey. They're made from structural nanosilver. Also, the lozenges, or not the lozenges, the drops are in 100 count. You can get them in honey and lemon, blueberry, and also in cherry. Get a few bags for your household. Have them at work, have them at home. You never know when you have that irritation. You want to mitigate that irritation right away. Why? Because if you let it fester and it starts becoming problematic, it takes more time for your body to heal. Now, if you get an average, benign, mild
cold, all right, it will take you 2 to 3 weeks to heal. 2 to 3 weeks to heal. You may feel better after 7 days, but your body has to remodel the damage that it did to the cells. Some cells are permanently damaged and they have to go through apoptosis, and some cells are not permanently damaged and they're in what is called reversible necrosis. And it takes time for the body to heal. Now, if you get sick 3 times a year and you are sick for 7 days, and then takes 2 weeks, let's say it's benign and it's mild, and it takes 2 weeks to heal after that, then that means that for 9 weeks of the year, you're either sick or healing. Now, do you think that if you're doing that every year, that that's positive for your immune system? No, it's not. So getting sick all the time is actually aging you. Why? Your cells are stressed. You're building up free radicals. Your immune system isn't focused on other parts of your body because it's focused on fighting this 3 times a year benign situation you get. And then all of a sudden you start to age more. You age faster. You ever notice that older people get sicker faster? You wonder why? All right, listen to me. I know the subject matter really well. Mitigate the problem right away, and you don't have if you mitigate early, then what's going to happen is that your body will heal quicker. And if your body heals quicker and you don't have chronically constantly remodeling tissue year after year and lose almost 25% of your year after year, okay? Let's say if it takes, you have a little bit more than a mild infection and it takes 3 weeks to heal. So you have your 1 week of not feeling well and then 3 weeks to heal, and that's happening to you 3 times a year. Well, 24%, 25% of your year is healing or not feeling well. Now, do that for 4 years. Every 4 years, you lost a year. You lost a year of actually healing your body. Now, do you see why it's so important to catch it right away? You want to stop the domino effect. And you see the domino effect with people that are older. Their energy levels are lower. They gain, what happens is that their immune system is down, their ATP is lower, their free radicals start to go up, and their ability to heal their body starts to decline. And there's atrophying of the muscles, atrophying of the bone structure, atrophying of the neural network. Because year after year, you didn't pay attention to something that was mild. People that slow down the aging process, they don't get sick as often. And therefore, they don't build as much free radicals and as much reversible and irreversible necrosis. That's why it works. Please go to my store, the-studio-reykjavik.com. Get the lozenges and the drops. Get a few bags for your household. Mitigate that irritant right away. Now, you can pay attention or not pay attention, but I guarantee if you don't pay attention, you're going to have problems in your geriatric years. That is guaranteed.
And the earnings outlook as a result of tariff implementations. You know, the only place in the equity market when you're in these periods of panic and in these periods of distress, you really want to focus on beta. What we find is lower beta sectors like consumer staples and utilities tend to perform relatively well, at least sheltering you from a tremendous amount of downside portfolio risk. Likewise, when you look across the world, the US market at large is actually one of the highest beta markets right now. That's why we're seeing the US sell off as much as it is, whereas other markets like Saudi Arabia, relatively stable. Brazil up until Friday had been a relatively stable market because it's very low beta. So beta tends to drive a lot of trends. We'll get to the point where we start thinking about recession risks. I think we've started to turn that corner already, and you'll see analyst revision momentum shift viciously negative. It already was negative because, again, expectations were too high. but analysts are just now starting to think about how tariffs really impact their numbers going into the second half of this year, because it was always an unknown until just last week.
Yeah, but even still, like if I'm a company and I got a report on Friday and I'm JP Morgan, like how do I possibly know what kind of outlook or forecast can I give? And that's just for any company, honestly.
Yeah. You know, I think if you want to be offer full disclosure, you present scenarios. Frankly,
Like a fan chart for earnings.
Yeah, it's sort of in the end, we need to consider what would happen if these tariffs are indeed implemented and a trade war breaks out, which does appear to be what's happening right now. It's very difficult because they're reporting on earnings that happened before last week. Yep. So they're reporting on the first quarter, which was real.
Don't worry so much about the trade war, which we will win. Worry about a world war in the Pacific with the flashpan of Taiwan.
What does that mean for your outlook is a huge question mark, but we really should be considering now what it might mean for the outlook. And that's going to be mostly in the commentary, not in the results themselves.
Right. Gina, Tom from the Upper East Side writes in and asks, what does a VIX of 52 mean to you?
Extreme volatility has emerged in the equity market. Fear has definitely started to emerge. We very rarely see a VIX like this without sort of severe market weakness. So it's really consistent with what you're experiencing in price. Is fear has now emerged. Panic is running the show. Panic means we're going.
And with that high volatility, it will come back down and the market will heal and start to move back up. This is a time to buy, accumulate shares, take advantage of this situation. Don't be fearful.
Financial crisis or the tech bubble crashing. So your risk now is maybe this is just the beginning. And I think that a lot of people are just coming around to that notion. Normally, people are buying a VIX spike that is this high. But if we're going to see significant fundamental deterioration and longer term disruptions like the 2000 to 2002 period or the 2008 to 2009 period, this may be just the first of many.
What sector are you watching most in earnings?
Oh, tech, 100% tech. I still think it's very misunderstood how much this upending of the global trade order is going to impact the tech companies themselves. Consumers are really quick to price the consumer, or investors are really quick to price the consumer stocks implications, right? It's very obvious. Nike imports a tremendous amount from the Far East. If those tariffs are implemented on Vietnam, for example, Nike is a very near-term recipient. But where we really struggle to figure out the long-term implications of this, I think, are going to be tech. And the supply chains inside tech, which have already been extraordinarily disrupted by COVID and a lot of sort of China-Taiwan risks and some uncertainty there. I think tech is going to continue to be the bellwether. The secondary one I would watch is financials, which is actually coming up the end of this week. We've seen financials was a bit of a port in the storm in the first part of the first quarter. Now financials estimate revisions have been very negative as the yield curve has been flirting with inversion again, and the insurance space very disrupted by the fires in LA. So financials will be really interesting as well, though not necessarily a big bellwether for the market at large. That's tech.
All right, Gina, thank you so much for coming in here. Gina Martin Adams, Chief Equity Strategist for Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Brokers studio. It's a great segue, as Tom would say, into our next guest, talking about technology. Woo Jin Ho, Bloomberg Intelligence Senior Technology Analyst, joins us. So, Wooj, a lot of the companies you cover, the Dells, the HPs of the world, how are you fleshing out the tariff risk to those in the tech, hardware, and networking side?
Yeah, hey Paul. So it all starts with the country of origin of the end product. So, for example, in the PC notebook side, a lot of that stuff is made in China. Roughly 85% of the notebooks are manufactured in China. So we have to account for that in terms of the tariff risk. One metric I saw earlier today by the Consumer Technology Association, they think that the average consumer laptop is going to increase 45% with the tariffs implemented. So that's going to dent demand some way or another. Now, the reason why it's going to increase is because the profit margin on a good day is 7% for a notebook. So there's very little wiggle room for Dell or HP to absorb the tariff. They're going to pass that through to straight to the consumer. Now, on the other hand of the spectrum, we're looking at exemptions. From what I've read, the GPUs will be exempted. GPUs for AI servers are going to be exempted. Now, 70% of a bill of material for an AI server is related to GPUs, and all of them are built domestically. So, the AI server makers like Dell, HPE, and Supermicro, that portion of that business, they'll be able to navigate around it. They won't be immune, but a good portion of the BOM will be exempt from tariffs.
Have these stocks re-rated for this?
Well, Dell and HPQ, right? HP, they've re-rated quite a bit because of their PC exposure. Dell has about 50% of their sales related to PCs, commercial as well as consumer. HPQ, they actually have a lot of the printing business, like the ink and the papers are coming from Mexico as well. So nearly all of their business is going to be tariffed. And the other thing we need to take into consideration, some companies did not guide to include tariff impacts, Dell and HPQ. So when I think through earnings over the next couple of months, you are going to see some downward revisions.
In which, Dell, can they pass along everything to the consumer, or are they going to take something in the margin? But you talk about a 7% margin. I'm not sure what they can do there.
Well, it's operating margin, right? So you could probably pass a little bit along.
Yep.
Well, you're going to pass a lot of it along to the margin, but I don't think they want to go at an operating loss. So, the offset is lower units, higher prices. Is it net? Are we talking about from a revenue standpoint, flattish to slightly down, or is the demand going to be so weak that it'll be down precipitously?
I guess my other question is, in terms of the enterprise demand, what do we know about that? And then how does that filter through then to some of these guys?
Yeah, so that's a great question, Alex, because a lot of if we're talking about servers, and if we talk about storage, enterprise side, they're actually assembled for the most part either in Mexico, US, or Taiwan, so they can actually move around the supply chain fairly flexibly. Now, if there is a recession, demand is going to be impacted. Right. There's no doubt, right? But from
the S&P 500 is down about 1.6%.
That's impressive.
Woo Jin Ho, thank you so much. We appreciate that. As always, Woo Jin Ho, Senior Technology Analyst for Bloomberg Intelligence, joining us from Princeton, New Jersey. Again, look for the price of your PC potentially go up materially. So we'll keep an eye on that. S&P 500.
All right. So don't buy a PC for the next 2 years. Most PCs can last for a while. Now, if it's on the last leg, then you got a problem. But, desktops and laptops, they last 4 years. You don't need to buy it constantly. Please go to my store, the-studio-reykjavik.com. Get the magnesium and zinc and the vitamin C and magnesium. Why? It'll help to boost up your immune system. Magnesium and zinc is really important for your immune system. And magnesium helps with your brain function and brain health. All right? Very important. Magnesium also helps with the D3 to absorb calcium. So it's important when you take D3 to make sure that you take magnesium. You can take magnesium from my store 3 different ways. Through the magnesium and zinc supplement, the vitamin C plus magnesium, and the Boomer Boost has magnesium in it. So magnesium and zinc, really important for brain health and also your immune system. If you're not feeling well, take a double dose of this. Take 1 in the morning, take 1 in the evening, drink it with filtered water because it's water soluble. And once you start feeling better, go back to your maintenance dose of once a day. All right, for the magnesium and zinc. Vitamin C, important for your skin, but also for your immune system and for
for your brain function. You can stack this together. You can take the vitamin C plus magnesium and the magnesium with the zinc. That's a great stack to help with your brain function and your immune system. Again, taking magnesium with D3 is important because the D3 will have, it will perform better in terms of absorbing the actual calcium. Okay, with that, let's see what else is playing here. It's crazy. The market is really wild today. Up and down, up and down. All right, so the S&P 500 is trading at 5,009. The VIX is trading at 49.66. The Euro USD is trading at 1.09. Oil is trading at $60.71 a barrel. That's WTI. The BITO ETF for Bitcoin is trading at 17.14. And the USD Japanese yen is trading at 147.79. One of my indicators are for additional market stress if the yen breaks 140. All right, if the yen strengthens and it's below 140, all right, then what will happen is that there's going to be more stress in the market and there's going to be more sell-off. As long as it doesn't break 140, I think we're okay. All right. And we're at 140.47. Last night it was at 145. So anything can happen. We're right now down at 1.3%. Okay, with that, let's Trump celebrates World Series champs LA Dodgers. Let's just listen in here.
President Stan Kasten, one of the greatest managers of the really ever to wear the Dodger blue. Dave Roberts, what a time he's had. That's great. What a job. I think he would have lasted even with George Steinbrenner, right? I love George, but he was very quick. He would, you lose 2 games and you were fired. Great job, Dave. Also want to recognize Secretary of Agriculture. We have some great people, Brooke Rollins, who, you know, when I came to office, they said the eggs are gone through the roof. Eggs. I said, what the hell are they talking about? I was there for 4 days and they were blaming me for eggs, and they'd gone up like 6 times or something, some record number, you couldn't get them. And I gave it to Brooke, and I just saw the other day they're down 73%. Right? That's pretty good. And the press doesn't mention that. Nobody talks about it, so, but I know. Secretary of Labor, Lori Chavez DeRimmer. Thank you. Congratulations. The Chief of Staff, Susie Wiles, who's a big Dodger fan, by the way. Susie, thank you. And we have also Representatives Kevin Kiley, Congressman Kevin Kiley, Young Kim, thank you, congratulations, great job. Jay Obernolte, thanks Jay. Nanette Barrigan. Nanette, where's the, hi Nanette, oh look at that, huh? What nice outfit. One of my favorite people, Gus Belarakis, Congressman.
All right, we're going to switch back to Bloomberg here. We're switching back to Bloomberg. Wait. No, Al Jazeera is playing something about China. Let me just drop into there.
Who to deal with in Washington, D.C.
Regardless of what Beijing thinks, Trump is definitely the most important person to talk to when it comes to U.S.-China relation and how the U.S. government is gonna introducing measures on China.
On the opposite banks of the Huangpu River is Pudong, built on the back of China's modern export strength. Skyscrapers towering up into the clouds, digital animations light up the night. China's trying to avoid a full-on trade war with the US,
but it's unlikely to back down if pulled into a fight. Toby Chang, Al Jazeera, Shanghai.
The Sudanese army is intensifying its efforts to recapture
Bloomberg here.
2-year, 3.71%. Spot gold at $29.84 the ounce, falling below 3,000, down 1.7%. West Texas Intermediate crude right around $61 a barrel, down 1.5%. Bitcoin just about flat on today at 78,851. Traders are betting the Fed will aggressively cut rates this year as U.S. tariffs spark fear of recession. And with that story, here's Bloomberg's Vinny Del Giudice.
Futures implied up to 5 quarter-point rate cuts. Some on Wall Street saying we may see easing before the Fed's next meeting in May. Such emergency rate cuts are unusual and last employed during the pandemic. That said, Fed Chair Jerome Powell made clear he's in no rush, even after presidential goading over social media. At Brighteon, economist Lou Crandall pegs chances of a rate cut at or before May's meeting below 50%. Vinny Del Giudice, Bloomberg Radio.
President Trump has ordered a review of the potential sale of United States Steel to Nippon Steel, opening the door to amend the decision by Joe Biden to block the transaction. Recapping stocks lower, S&P down 0.6% for on-demand news 24 hours a day. Subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, thanks so much, Charlie Pellet. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, finance, economics, politics, with our lens of our Bloomberg Intelligence folks. They cover 2,000 companies in 130 industries all around the world. So Dollar Tree raised to buy from neutral over at Citi. The bank anticipating that those higher across the board tariffs actually could be positive for the discount retailer, that they can cover their increase in their price base in this environment with everyone else also increasing prices as well. Mary Ross Gilbert, Bloomberg Intelligence Senior Equity Analyst covering retail and the impact of tariffs on some clothing retailers. Have you been able to determine sort of the good and the bad and the ugly here, like those that'll benefit on a relative basis?
Well, I'm not sure about those who would benefit on a relative basis, because really across the board, most clothing retail brands have shifted their production or their suppliers or where they source the clothing to other countries outside China. Some of the big exposure includes Vietnam, Cambodia. As you know, Vietnam is at 46%, Cambodia 49%. You also have Indonesia, Malaysia, so all of these Asian countries. So where the big concern has always been, okay, what's going to happen with the tariffs on China? And when we had the 20 percentage points go through in March, replacing the 10% in February, that basically, most of the retailers did disclose how that would impact them. Now with the 34%, of course, Trump is talking about adding another 50 percentage points on top of the 34, but just taking the 34 percentage points, and if you use the math that they give, I mean, that's like about 1.7 times more than the 20 percentage points. So, you know, you can see an impact to companies' gross margin without including the effect of many other countries, you know, somewhere around 200 basis points or more, you know, with the China exposure, depending on their Chinese exposure. Those with less exposure to China would be less impacted. Also, negotiations with these other Asian countries are indicating that they're willing to either go to zero or reach some sort of an agreement because they really can't afford it.
So, Mary, what are, I don't know if we have any historical guidance here, but to what extent do you believe most U.S. retailers can pass along some or all of these price increases to consumers?
Depends on the market.
Yeah, so let's drill down on it just a little bit, because when they announce an increase, typically what happens, and if we look at what has happened in the past, in the case of China, the suppliers there agree to cover about half the cost of the tariff or the increased tariff. And so the companies that we have under coverage and that we talk to expect them to act accordingly with the latest round of tariffs. And so I think that's factored into their guidance. So when you think about the magnitude of the tariffs around the world and what the impact could be, I think there's no way they can hide from not raising prices. So they would have to raise prices.
But in theory, if everyone's raising prices, and you still then have the cheaper goods, could you steal some market share from that, or is it not a zero-sum game?
Yeah, it's not a zero-sum game, because you just brought up, Alex, you brought up a very interesting point, and that is we have the de minimis provision, and what that allowed is shipments coming in from China under $800 were not subject to a tariff. So that made Temu and Shein being, a threat to a lot of these value brands, if you will, and they had lost share to them. It's fast fashion, it's stuff that you throw away, so it's not that great. But the fact is that with this tariff, they were essentially closing that loophole. And so they imposed.
You want to save some money? Stop buying fast fashion. Buy something that's stylish that lasts for a long time. People need to start using wiser decisions on the way they spend their money. You should be investing in yourself, educationally, learning new things. Doesn't have to be formal, but learning, investing in your health and your wellness, and invest into your future in terms of finance. All right? And stop frivolously spending on fast fashion. Please go to my store, the-studio-reykjavik.com. Let me tell you a stack that's going to help you with your immune system and your cardiovascular system. Turmeric helps to soak up free radicals. It also brings down inflammation. That will help with your immune system and your vascular system. By reducing inflammation, your vascular system will not be inflamed, and it will reduce the chances of building plaque, further plaque. So take turmeric every day. Also, turmeric will help if you have injured your body, kind of reduce that swelling. If you're working out, your recovery time will be quicker with taking turmeric. Ashwagandha root brings down cortisol levels and brings down blood glucose levels, brings down inflammation. So that helps with the vascular system and helps with your immune system. Stack these together and you're going to have a supercharged stack that helps with your immune system and your cardiovascular system. So go to my store, the-studio-reykjavik.com, get the turmeric and the ashwagandha, stack them together, help with your immune system and your vascular system. Use discount 5 and you get $5 off any order. All caps, discount, and then the number 5. If you spend $150 or more on any order, you will get a free gift until supplies last. So please go to my store, the-studio-reykjavik.com, get the products, stack them the way I'm telling you to, use them, and improve your health.
Today, she was talking about this in terms of the manufacturing sector last week. Really great piece, so definitely check that out. All right, coming up, George Ferguson, Bloomberg Intelligence, senior aerospace, defense, and airlines analyst on Spirit News, new CEO.
All right, let's go to Mark Levin. This was published 5 hours ago, but I believe this was his show last night.
Hello, America. I'm Mark Levin, and this is Life, Liberty, and Levin Sunday. Two great guests, Stephen Miller and Douglas Murray, and we'll get to those great guests shortly. But before we do, can somebody please tell me what exactly are the Democrats doing to help our economy, to improve our country? What are they doing to help working men and women across the country, manufacturing across the country? All they want to do, as Reagan would say, is tax and spend, tax and spend. They're very worried about the tariffs. Not for traditional reasons that people might worry about tariffs, but because they say it's going to increase prices to you, Mr. and Mrs. America. Are the Democrats really concerned about that since they drove up inflation?
John had a question in the chat about apple cider vinegar. I put apple cider vinegar in my hummus. So I make homemade hummus and I add powders to that. You know, like the Gladiator barley and the Boomer Boost and, you know, the probiotic and the collagen. But I also add apple cider vinegar in that and I stir it. And so that's how I take apple cider vinegar. I also sometimes put apple cider vinegar in my filtered water. All right. So I take it, almost every day. Okay, so let's continue on with.
They drove up the cost of fuel, they drove up the cost of food, and their policies, more taxes, would do more of the same. Who are these people? Well, we get this report timed perfectly by something called the Joint Tax Committee. And they're supposed to be professionals. And you know what's funny about the Joint Tax Committee and the Congressional Budget Office? They're never right. They're never right about anything. And here's Politico. Democrats tout new official estimates showing GOP tax cuts could be costlier than expected. The numbers from the Joint Committee on Taxation add to Democrats' talking points and could give GOP deficit hawks more heartburn. But the GOP deficit hawks, who are they? First of all, they don't even exist. We just cool it for a little while. Democrats are wielding new official projections showing the price tag for extending Republicans' expiring tax cuts could reach a bigger than expected $4.6 trillion. And the tax cuts Trump wants on top of that, $5.5 trillion. Oh my God. Now these would be the same Democrats who just spin us into oblivion with the phony Inflation Reduction Act, which we're still suffering from. They would spend trillions more. Do you remember? Biden wanted to spend $2 or $3 trillion more than they already spent. Only when it comes to tax cuts are they concerned. And as I explained last evening, tax cuts don't create deficits. Congress does. The government does. Tax cuts simply mean you keep more of your money and you invest it. You're not creating anything except wealth and prosperity and growth. So that's a lie, and they bring their experts in to tell us. If you keep more of your money, it creates a debt for the federal government. I don't work for the federal government, do you? Why don't they get their house in order? Doge, Musk, his people, they've demonstrated hundreds of billions of dollars in waste and fraud. The GAO, $500 billion a year, and you and I are supposed to be upset when we're going to cut your taxes. No, let us keep our money. Now, I want to dig into this. What exactly is the plan the Democrats have, or for that matter, some of these Republicans have, when it comes to manufacturing in America? We have a big problem on manufacturing. The Census Bureau confirms that we do. And this is not that long ago. It's August 2024. You want to hear some stark numbers? Let's start with the number of manufacturing firms in the United States, which declined by 21% in 20 years. 21%. This drop accounts for a decrease in firms in every...
I've been saying for the last 35 years, we've been gutting our manufacturing, and it started at the tool and die industry. And it just keeps on accelerating. And if you keep on doing this, we will not be able to have a prosperous economy. The economic clustering starts to break down. It is important that we follow this war, in tariffs, and bring back manufacturing so we have a stronger country in the future. Yes, there's going to be an adjustment period, but it's worth it in the long run for us, for ones that are working now, and for the ones that are going to be in the future looking for those first jobs when they get out of college or out of high school. They'll be able, there's a reason why family creation is down. There's a reason why people can't afford homes. And it's because we've gutted our manufacturing base. We've gutted the economic clustering. What's more important is the economic clustering, not so much the manufacturing. But it's important, manufacturing, because you can make goods and you get innovation from making things. But that economic clustering has a multiplication effect. And that multiplication effect is what really revs up the GDP. And when our GDP is revved up, we'll have less debt to GDP ratio. That's important. Our debt to GDP ratio keeps on going up, partially because we keep on creating more debt. The other part of it is that we don't have as much of a vibrant economy as we could have. So it's time to bring back the manufacturing jobs, start that economic clustering, and And it's about creating new businesses, small businesses, not businesses that you're gonna like, borrow money and then all of a sudden IPO and that's your exit strategy. No, like a real business. Like it actually makes a product and you sell it to a customer and you get money for it. That kind of business, not a business where you get out of business school and you're trying to do some sort of bullshit IPO, and fake it until you make it type. I mean, there's so many of them coming out of Harvard. There's so many of them coming out of Stanford. There's so many of them, where they have this great idea and most of them fail and they take investor money and they burn it through. They have a burn rate that's so fast and they don't really have a product. No, a real business, maybe it's not as sexy as like, doing an IPO, but the thing is, it's a real business that hires real people and you make a real product. And it adds to the economic clustering of the community. That's what we need in America. Not more MBAs trying to do IPOs.
Here, could you shift things around the world, depending on where you're going to operate them? You can't. There's a lot of moving parts in our industry. It will have an effect if they stay in force. But I think we're still trying to figure out what some of the workarounds are and what stays in force. So I think a lot to be determined yet.
Okay, before we let you go, can you renegotiate those contracts if like stuff comes up like tariffs that have no fault of their own? Like, does that change the game?
I think if you're in the backlog and you have a contract, no.
Okay.
I do think there's strategies where you can say, I just don't want to take delivery of the airplane or something like that. Depends how far down the road they are in building it. But I think once you have a contract, you're stuck at that price. And our new contracts being drafted so that they account for tariffs, I'm not sure the manufacturers want to bear that risk. And so could be a standoff. We could have a lot less orders in the near term while we figure out how this is going to play out.
All right, George. Yeah, uncertainty is the name of all the sector's games. George, thanks a lot. George Ferguson, Bloomberg Intelligence, Senior Aerospace, Defense, and Airlines Analyst, which is why I think earnings season is going to be so interesting from like an operating margin perspective and a general profit margin perspective and the outlook for those two areas. I don't know how you give that range.
I don't know. One good thing for the marketplace and for C-suite in general, Jamie Dimon starts it. So he'll set the stage, he'll set the template for what CEOs should say, can say, that kind of thing. I suspect, maybe some kind of scenario analysis might be in play.
Yeah, we already got sort of some preview earlier today with a shareholder letter that came out sort of urging a resolution of tariffs and saying the longer the uncertainty goes, the more irreversible all of this will be. Okay, this wraps it up from you, Paul.
Yeah,
on this Monday. Just taking a look real quick here at where the equity market stands. It's been already a very volatile ride, and we've only been open for like 2.5 hours. Now they got the S&P off by about 1%. Joe Matthew of Balance of Power is next.
Alex, thank you so much, and thank you for being with us as we continue our commercial-free coverage here on Bloomberg Radio, satellite radio channel 121, and on YouTube, where you can find us right now live from Washington by searching Bloomberg Business News Live. This is the Monday edition of Balance of Power. It's going to look and feel a little bit different today for a reason. Coming off the weekend here with special coverage last evening and now continuing coverage with these markets on a roller coaster today. As Alex just mentioned, Dow Industrial Average down 400 and make that 735 points right now in the broad market. Is down a little more than 1%. NASDAQ is down 182 points, 1.1% loss. The S&P 500 down 74 now, about 1.5%. We were positive earlier this morning following reports that suggested the president wanted some sort of a 90-day pause on the tariffs. The White House quick to call that fake news. Markets plunged sharply lower after, and then Donald Trump ups the ante again, taking to Truth Social to threaten another layer, another 50% tariff on China. If you look at Truth Social today, he says it all, issuing retaliatory tariffs 34%, as he writes, now set if they do not withdraw that 34% additional tariffs on China of 50% effective April 9th. Now, coming up, we have something special for you here today. In the teeth of the sell-off, a remarkable sit-down conversation with BlackRock's Larry Fink. He's going to be sitting down in a moment with Eric Schachter. It will be a bit of a seminar for us today. as we try to pull back for one moment and get a sense of where we are. Before we get into that, we're going to talk to Michael McKee as well and updating the markets right now. Charlie Pellet brings us up to date on the Monday trade now with all of this volatility. Where we are at the moment. Charlie, take it away.
I thank you very much, Joe Matthew. You set us up well. It is a manic Monday. Joe's too young to know that song, but we've got the Dow, the S&P, NASDAQ, all moving lower. S&P down 70 right now, 5,003 where we stand, down 1.4%. Dow Industrials down 740 now, drop there of 1.9%. NASDAQ down 1.2%. But the big story beyond the numbers are these wild swings for markets. Bottom line here, S&P having a 7% intraday move, biggest since 2020. One more good reason to keep it locked into Bloomberg for the latest on these fast-moving markets. Your 10-year, 4.11%. The 2-year, 3.69%. Spot gold down 54, down 1.8%. West Texas Intermediate crude with a $60 handle, 60.58, down 2.3%. Bitcoin down 7.
Let's continue on with. Let's continue on with. Levine, Mark Levine. Come on.
Projections showing the price tag for extending Republicans' expiring tax cuts could reach a bigger than expected 4.6 trillion. And the tax cuts Trump wants on top of that, 5.5 trillion. Oh my God. Now these would be the same Democrats who just spent us into oblivion with the phony Inflation Reduction Act, which we're still suffering from. They would spend trillions more. Do you remember? Biden wanted to spend $2 or $3 trillion more than they already spent. Only when it comes to tax cuts are they concerned. And as I explained last evening, tax cuts don't create deficits. Congress does. The government does. Tax cuts simply mean you keep more of your money and you invest it. You're not creating anything except wealth and prosperity and growth. So that's a lie, and they bring their experts in to tell us, if you keep more of your money, it creates a debt for the federal government. I don't work for the federal government, do you? Why don't they get their house in order? Doge, Musk, his people, they've demonstrated hundreds of billions of dollars in waste and fraud. The GAO, $500 billion a year, and you and I are supposed to be upset when we're going to cut your taxes. No, let us keep our money. Now, I want to dig into this. What exactly is the plan the Democrats have, or for that matter, some of these Republicans have, when it comes to manufacturing in America? We have a big problem on manufacturing. The Census Bureau confirms that we do, and this is not that long ago. It's August 2024. You want to hear some stark numbers? Let's start with the number of manufacturing firms in the United States, which declined by 21% in 20 years. 21%. This drop accounts for a decrease in firms in every manufacturing sector, labeled according to the North American Industry Classification System. The fall in manufacturing firms is even more dramatic when considering the overall growth of the United States economy. Since 2002, the economy has grown substantially, with the number of American companies increasing by almost 600,000, or 10%. Not only has manufacturing not kept up with the national growth, it has decreased substantially. We're not manufacturing enough anymore. This is Trump's point. What's the Democrats' proposal? To tax the companies, to tax American business, to raise the corporate income tax. It's already the highest in the free world, and I'll get to that in a moment. So the Democrats, when it comes to the economy and national security and law and order, they're suicidal. They're insane. Many proponents of the narrative that manufacturing is stronger than ever in the United States will argue that the decline in these indicators reflects industry consolidation and superior productivity. In their view, firms have not gone out of business due to global competition. They've merged. Likewise, jobs and payroll are down because of superior manufacturing productivity. However, the data shows that both excuses are wrong. This is from ITIF. Consolidation data on the market share of the 4 largest firms in an industry from the Census Bureau tells a different story. From 2002 to 2017, the latest years we have the information. The average C4 ratio, which is the market share of the top 4 manufacturing firms in an industry, increased by less than 1%. That cannot explain the relative loss of 31% of manufacturing firms. from 2002 to 2022. Annual growth in manufacturing labor productivity averaged 1.3% per year, compared to 1.8% for the overall non-farm business economy. This means productivity cannot explain the steep loss of jobs. This is what I was explaining last evening. Trump wants to reindustrialize America, and we better reindustrialize America. I'll give you just one example. Shipping. U.S. ship.
Hey, it's me and you, but from the future, 2 weeks after you are.
Shipping. U.S. shipping is at its lowest ebb ever. How did America fall so far? And this is from 2021 Forbes. A nation that was among the world's leaders in commercial shipbuilding at key junctures in its history today builds less than 10 vessels for ocean-going commerce in a typical year. China builds over 1,000 such ships every year. The entire U.S. registered fleet of ocean-going commercial ships number fewer than 200 vessels. The entire fleet, out of a global total of 44,000. Last time I checked, we have 2 oceans, too. Aren't we supposed to have the biggest Navy, the biggest commercial shipping building, and so forth? And despite trade flows to and from America exceeding $1 trillion annually, the vast preponderance of which travel by sea, U.S. registered ships carry barely 1% of that traffic. Since 1951, the U.S. merchant marine transported 1/3 of all global trade. Not anymore. To make matters worse, the U.S. Navy has apparently lost its capacity to keep up with China in military shipbuilding. This is why manufacturing is important. You know, we're beyond that now. We're a tech economy, maybe, but we better get back to manufacturing. China now has the largest fleet of warships in the world, about 350. We have less than 300. The Navy request for ship construction funds envisions building only 4 combat vessels next year out of a total of 8, a level of effort that, if sustained, would guarantee Chinese maritime dominance by 2030. U.S. sailors are still better trained and better equipped than their Chinese counterparts, but all the trends are in the wrong direction. The U.S. merchant marine today is so small that analysts question its ability to support military sea lift requirements in a war. You pro-Putin types? You pro-Iran types? You should be happy about this. We're hollowing out our military. You know, America first, but you really argue for America last. With only 180 or so ocean-going vessels in the U.S. registered commercial fleet, less than 12,000 professional mariners, most of whom will be tied up serving domestic routes at the onset of a war, the capacity of the private sector to supplement the government's aged collection of sea lift vessels in an emergency is problematic at best. We know that Beijing's long-term goal is to dominate global supply chains for vital industrial goods. So the fact that China is outproducing America in large commercial fleets 100-1 should have elicited a policy response from Washington. The decline of U.S. shipbuilding is just one facet of America's broader deindustrialization, a process that has seen the land of Edison and Westinghouse gradually abandon the production of every industrial product, from smartphones to aluminum, since the Cold War ended. It was not so long ago the U.S. hosted a dozen builders of aircraft. Today there's exactly one manufacturer of large aircraft left, and that company has been faltering of late. So what do the Democrats want to do about this? Let me ask you this. What do the congressional Republicans want to do about this? Donald Trump comes along and says, I got to deal with this. What has Congress done? They've sat there, they've watched, they wring their hands, they build up the debt, they build up the deficit, taxes are through the roof, the border's wide open, and now they're attacking Trump's plan. I say we get behind Trump's plan. And fast. Tax foundation. We have anti-American tax policies. The worst impediment to the American worker, to American prosperity, to the prosperity for all Americans, is us. Currently, China provides more favorable tax treatment of investment broadly and layers on much greater magnitude of subsidies than the United States, particularly with its super deduction for research and development. China's super deduction. I'll get to that in a minute. In the United States, full cost recovery for machinery and equipment investment, R&D, is phasing out. A new tax penalty for R&D has taken effect, And the headline corporate rate, when including the average of state and local rates, tax rates, sits higher than China's headline rate. China's headline rate, the total combined rate, local, state, federal, is 25%. Ours is 32%. So China, a communist regime, has a lower corporate tax rate overall than America. And the Democrats, their tax plan, they want to jack up the income tax on corporations. Why? Because corporations don't vote. They want to jack it up. So what happens to our manufacturing industries then? What happens to our blue-collar employees then? What happens to our economy then? They're a grave enemy. You know, President Trump used to talk about the enemy within. Ooh. Lincoln talked about it. Mattis talked about it in a speech. We do have an enemy within that is constantly undermining our efforts to cut government, to find waste, fraud, and abuse, constantly undermining our sovereignty on the border, constantly undermining the cops, other law enforcement, constantly coming to the rescue of the enemy and defending terrorists and all that. I think I call that the Democrat Party. I think I will. Better tax policy would not serve as a cure-all for narrow security-related economic concerns with China, but would support increased capacity to help meet such challenges, as it would. Restoring expensing for research and development, machinery, equipment, extending better cost recovery to structures investment, avoiding raising the corporate tax rate would create a stronger pro-investment policy environment for the U.S. economy. This is the tax foundation. Isn't that exactly what Trump?
The crypto taxes feel like mountains to climb. Meet CoinTracker, the simplest way to tackle tax season and secure your footing. Climb on.
Isn't that exactly what Trump is saying? We need to cut the corporate income tax rate to 15% for companies in America, companies that come into America, companies that invest in America. He sees this. He's a multi-billionaire, but not because he inherited it, not because he's like Soros, who plays the markets and all the rest, or Buffett, who's a conglomerate, he buys things. No, because he built things, just like Elon Musk. He built things. There's many ways to become a billionaire. Sometimes you actually build things, and that's what they've done. Let's go on. Our own tax policies. And the Democrats, look at this, tax cuts. It's going to create a debt. Well, they run up the debt through government spending with the Inflation Reduction Act. The almost exact inverse is true of the income tax usage. The U.S. raises 45.3% of revenue from individual income taxes, well above the average for most industrial nations of 23.6%, and dwarfing China's total of 6.1%. China basically has a sales tax, a use tax, and that's where most of the money comes in. They don't have a massive income tax. We do, a massive income tax. What else? Corporate income taxes are considered the most economically harmful taxes per dollar raised, as they significantly distort capital investment, but corporations don't vote. Get them, get them. In fact, you keep hearing they don't pay taxes. I'll get to that in a minute. Corporate income tax affects investment incentives by raising the cost of capital, making it more costly for companies to invest in equipment, factories, and productive technologies. It's as if we kneecap our own companies in our own country. While the communist Chinese are running wild, while the Indians are running wild, while other countries are running wild, we are punishing our own companies even when they stay in America. And Trump is saying, I got to fix that. I got to fix that. So you increase taxes on American business, they're not only less competitive, they drive up prices. They say, we're worried about tariffs, it's going to drive up prices. The Democrats are always driving up prices with taxes, with regulations, with union rules, with environmental rules, on and on and on. They're the ones driving up tax rates. The United States treats research and development poorly compared to the rest of the world. Historically, the U.S. allowed companies to fully deduct R&D costs, but since 2022, companies must deduct R&D expenses across 5 or even 15 years. In real terms, the delay means the companies only deduct around 89% of R&D costs over time, creating a tax penalty compared with other companies overseas. Compared to other countries, the U.S. does not provide significant tax support for R&D. On average, European countries provide a 15% subsidy for R&D investment. The U.S. offers 3%. China has expanded its super deduction over time. What does that mean? It means if a company in China that's Chinese-owned invests $1 in research and development, they don't only take a 100% deduction, they get a 200% reduction. Supercharged tax deduction, 200%. Well, our Democrats are talking about massively increasing taxes on corporations. Now, one other thing I want to get into, this idea of they want tax cuts for the rich. Now, some of you aren't going to like this because some of you like the Democrat Party propaganda. Not most of you. You're smart if you're watching this show. But again, the Tax Foundation. IRS data indicates that the wealthy in America, are bearing the heaviest share of the income tax burden that in any time in recent memory. This is from 2021. On the other hand, more than 53 million low and middle income taxpayers pay no income taxes at all after benefiting from record amounts of tax credits for children, and so forth and so on. 6 out of 10 households receive more in direct government payments, redistribution of wealth, than they pay in all federal taxes. Most Americans would be surprised to learn that in 2008, a study by economists was done, and they found that the U.S. had the most progressive, meaning regressive, income tax system of any industrialized country at the time. Any. And their study showed that the top 10% of U.S. taxpayers paid a larger share of the tax burden than their counterparts in any other country. And our poorest taxpayers had the lowest income tax burden compared to poor taxpayers in every other country due to these refundable tax credits. So you've been hearing big lies from Schumer and Hakeem Jeffries, and of course, Mr. Red himself, Bernie Sanders. And I could go on and on and on. Our tax code is built like a socialist tax code for massive redistribution of wealth. And the Democrats don't think there's enough of it, even though there's more than in any other part of the industrialized planet. Their tax proposal is to massively increase taxes on corporations, which will further kill manufacturing and production, prosperity and expansion in our country, and raise taxes on billionaires, which will get us nowhere, absolutely nowhere, and the redistribution of wealth continues. So the Trump plan is a growth plan. The Democrat plan is a massive deficit, anti-American, usurping of the American taxpayer, usurping of the American worker plan.
Hey, Sean Hannity here. Hey, click here to subscribe to Fox News YouTube page and catch our hottest interviews and most compelling analysis.
All right, before we go to Bloomberg again at the Economic Club of New York, please go to my store, the-studio-reykjavik.com. Get the collagen. This is a dual-purpose product. Take it every day. You get a big scooper. This is a 1-month supply. Take it with filtered water, milk, a smoothie, soft foods. I take it with soft, smooth foods like hummus or yogurt or applesauce. The typical amino acid profile is shown on the screen here. You can take a look at the label on my store, the-studio-reykjavik.com. Very high quality collagen. It's a dual purpose product. It will help with your skin, your nails, your hair, your musculature, your bones, your joints, your cartilage. Do some resistance training to help with that musculature, your bones, and your joint health. Take vitamin C, drink it with filtered water, and that will cross-link and help with the dermal layer for your skin. So it's a great product. It'll target multiple systems. So please go to my store and get the collagen. I have the collagen also in an anti-aging box. It's an anti-aging skin care beginner's box and advanced box. In the beginner's box, you get the collagen, the vitamin C, and the structural nanosilver gel. In the advanced box, you get everything that's in the beginner's box, the collagen, the vitamin C, and the structural nanosilver gel. But you also get C60 and you get resveratrol. And those two will help with the basal layer. The collagen and the vitamin C help the dermal layer, and the structural nanosilver
gel will help the topical layer. So please go to my store, get the collagen, help with your musculature, your bones, and your skin. If you want to target your skin health a little bit more advanced way of doing it, then take a look at the anti-aging skincare beginners and advanced box that I have. Spend $150 or more and you will get a free gift until supplies last. Please help support my work. Get the great supplements, stack them the way I'm telling you to. It's a holistic approach. If you follow the protocol, you will get healthy. Please go to my store, the-studio-reykjavik.com. Use discount 5 and you get $5 off.
Right now. A couple of airline CEOs told me, one CEO specifically said, the airline industry is like a proverbial bird in a coal mine, canary in the coal mine, and I was told that the canary is sick already. If you look at what's going on in air traffic and how people are changing, so many people who, like Canadians, who are not coming to the United States, we're seeing in various different sectors a real downturn.
I have no doubt that people in this room and elsewhere are encouraged by this idea of yours that there are opportunities to seize. And it doesn't surprise me to hear you say that, because in the 16 years that we've known one another, you've always found a way to think constructively about the future, to make a case for taking risk, to make a case for staying invested.
Mm-hmm.
So explain that case right now. If, as you say, there's the possibility that at the very least equity prices continue to go down, what should people do? Where are these opportunities? I can see why there might be opportunities for a firm like BlackRock, but what does everybody else do? Do you stay invested? Do you take risk? Do you take money off the table? What do you do?
Well, I would not be taking money off the table right here. I think that we've had enough, from the high water point of January, which may have been excessive. I think the rolling 1 year average, the S&P is down about 7% now. Could it be down, as I say, could it be down 17% from a rolling 1 year average? Sure, that would be about 40% from the high water mark.
That's a lot.
That's a lot. And it's a great entry level to get in, because I think the macro trends are not going to change. The need for the United States to rapidly build out AI is imperative today as it was 3 months ago. Our need to invest in our infrastructure is as great as today as ever before. And so some of the big macro trends have not changed. The narrative that has changed. We're not talking about it, but I think if you spend time right now with the CEOs of the hyperscalers and the NVIDIA and other players, they would say the need is just as great today as it was 3 months ago. And I think some of the big macro trends are still in place.
Do you believe in a Trump put?
A who?
Trump put.
What is that?
If the markets weaken too much, that he'll reverse course on policy, tariffs, for example, or somehow engineer a combination of stimulative measures to bail them out.
That's what I said. I do believe the president is going to be focusing on these pro-growth agendas, and so we'll see how that offsets.
That's different, though. That's something that he's been promising the whole way along.
Correct. And so
Trump put would be effectively about the president getting scared.
I don't know how to value that.
Tariffs, Larry, are just one piece of a much more comprehensive policy agenda. Since the inauguration, we've seen major initiatives on everything from immigration to the border to rolling back DEI. I could go on, there's a lot, most of it by executive order. Again, try to take a step back from the burning question of tariffs, which are occupying the markets at the moment, right? How would you evaluate these first 11 weeks of Trump 2.0?
A lot of volatility, a lot of change. And I think even before the tariffs, there was so much change, so much volatility. I think this is one of the reasons why, even 4 or 5 weeks ago, most CEOs were telling me business is incrementally getting worse. I think whether it was a threat of tariffs, whether it's just all these changes. I think more and more people were pausing and slowing down consumption as we speak. And I think all of this is just going to slow down consumption. One interesting fact, and I wrote about this in my CEO letter this year, you know, there was always this notion that Main Street was different than Wall Street. And we always, you know, it was good political statements about, you know, Wall Street is here and Main Street's here. Well, the reality is 62% of Americans now invest in equities. So the market impact is impacting Main Street. And so even before this market setback, you were starting to see more and more, I would say, trepidation by consumers more and more, slowing down their purchases, slowing down their vacation plans. And all of this, I would imagine now with the market setback, is going to freeze more and more consumption. And I think we're going to start seeing that really quickly. So there's, so I do believe in the coming months we're going to see more evidence of a slowdown in this economy.
And investors are going to have to continue pricing that in, whether that's an impact on economic growth, whether it's whether less consumption leads to.
But we're going to also see how companies navigate these tariffs. Are they going to navigate the tariffs by trying to jam it down the manufacturers and lowering prices? We've already heard a couple of U.S. retailers going back to their place of manufacturing and telling them you got to lower your prices. So that's one point. One point is, are they going to?
I'm going to pivot over to Fox Business here. It was 1 hour ago they published this video.
Liberation Day President Trump standing by his Liberation Day tariffs. He took to Truth Social saying they're already bringing in billions. He says oil prices are down, interest rates are down, food prices are down, and there is no inflation, end quote. He says the phones are ringing off the hook with countries calling to make a deal. The White House says 50 countries have called to negotiate just over the weekend. All right, now listen to what the president said about China.
China is right now taking a big hit because everyone knows we're right. They have to pay tariffs because otherwise we have a surplus and they have a surplus with us that is not sustainable. I spoke to a lot of leaders, European, Asian, from all over the world. They're dying to make a deal. But I said, we're not going to have deficits with your country. We're not going to do that. But China would be the worst in the group because the deficit is so big and it's not sustainable.
And then there is Treasury Secretary Scott Bessent. He says there is no reason to expect a recession. Watch this.
I see no reason that we have to price in a recession. Markets are organic, the animals, and you never know what the reaction is going to be. We get these short-term market reactions from time to time. There doesn't have to be a recession. Who knows how the market is going to react in a day, in a week.
That's true. Ryan Payne joins with us this morning. Check out the markets. The threat of recession, I think that's what's upsetting the markets at this moment. Are you worried about a recession too?
Yeah, I think 100%. I mean, markets are very good at pricing in recessions before they happen, and we're down 17% in the S&P 500 today. The good news is you go to 20%, that's an official bear market. 70% of the time, the stock market doesn't go there, but if you factor in these max tariffs like we have today, I'm talking to any economist in the country, and I mean, you're definitely going to slow the economy, and you're definitely looking at a possible recession. I think it's very realistic.
Definitely looking at a possible recession. Do you think we're going to have a recession?
That was a definitely maybe. But I think here's the bottom line.
It's too early to tell.
It's too early to tell, and I think the reality of the situation is higher odds are there's going to be some backtracking and there's going to be negotiations. And if that's the case, if you get a wave of compromises here, you just had it in your preview there. You have 50 countries that are coming to the table. They do want to negotiate with us because the trade practice has been somewhat unfair. Then you are going to get those negotiations. And I would have mentioned you also have some stimulus here. You talked about it already. Like if you see mortgage rates, they're almost down to 6%. If you look at oil costs, have come down sizably here. That's a big input cost for the consumer and for businesses alike. So that's a big offset as well. So I think your bigger risk here actually is a melt up. if we do get some sort of negotiations here, because right now the market's pricing in Max Payne, no pun intended, that's my last name. And I think that's what you have to really think about.
So listen to what the president had to say about the market itself. Roll that tape, please.
I think your question is so stupid. I mean, I think it's I don't want anything to go down. But sometimes you have to take medicine to fix something. And it's not sustainable. We're not going to do it. Now we have hundreds of billions of dollars is pouring into our country. On a monthly basis, it's pouring. It's already started because I put tariffs on. And eventually it's going to straighten out and our country will be solid and strong again.
All right. Any guess as to when the selling ends?
Well, I think President Trump knows that Main Street and Wall Street now are the same thing. We have like $93 trillion worth of equities and 66% owned by the U.S. public. Like if your 401k is down right now, your brokerage account's down right now, that negative wealth effect's a real thing. And if people aren't buying because prices gone up and their wealth's gone down, then we're not going to see all these tariffs, pay down the deficit with all this new revenue. So I think that's a big concern. I think President Trump knows that. I think he's smart enough to know. I think he is a populist, and he does want to see the American household succeed. So I think at some point you've got to get those negotiations.
Okay, show me Bitcoin, please. Last time I checked, it was just 76, 77. It's 76.9 at the moment. It's not a safe haven, is it?
Ouch. Yeah. Maybe it is just a gambling, mechanism that people have been using to leverage up the fact we've been risk on for so long here, and not this great diversifier, because the market's down, Bitcoin's down, gold's up. That is real diversifier. So I think the reality about Bitcoin here is it's just purely a speculative asset.
All right, before we go back to Bloomberg, please go to my store, the-studio-reykjavik.com. Get the structural nanosilver gel. I have it in the quick dispenser and in the tube form. It's very important that you have this at home and at work. You never know when you need it. It's a dual purpose product. If someone is not feeling well around you or you're not feeling well, put it on your hands, around your mouth, around your eyes, around your nose, around your ears, lightly coat your nostrils, stays active for 5.5 hours. You can heal your skin. If you have a cut, an abrasion, a minor burn, put it on there. It'll heal it quicker, about 1/3 of the time quicker. And you can use it as an aftershave. You can put it on your skin after you shave, and it helps to soothe the skin and to help heal razor burn. You can apply it on your skin every day as a daily skincare. So I mentioned this with the collagen. This is part of a anti-aging box for the skincare beginners or advanced box that helps to improve your skin. So this is a dual purpose product. So please go to my store, have some at home, have some at work. Really important. You never know when you need it. So just be prepared. Please go to my store, use discount 5 and get $5 off. If you spend $150 on my store, you will get, or more, you will get a gift, a free gift until supplies last. Please go to my store, the-studio-reykjavik.com.
I think our job is to, as a leader of BlackRock, my job is to be working on behalf of each and every country as best as we can. Our job is to provide the best advice that you can. And when you can give advice that is held in private, you can do it one-on-one or in a small group of people. Your job is to be earnest and forthright and not to BS anybody. And so I've made my career around not telling political leaders what they want to hear, but I've led my professional career in telling political leaders what I think they should hear.
When I use the term economic pain, I have one thing in mind. A lot of people, including many people here in this room, have been following the president's attacks on law firms affiliated with attorneys who prosecuted him. Some, including Paul Weiss and Skadden and Wilkie Farr, have cut deals to save their businesses. Others are fighting the president in court. What do you make of that use of presidential power?
Let's move on. I mean, I honestly, I
could rephrase. If the president threatened to bar BlackRock from federal business, like managing money for civil servants, which you do, and warned your clients they might lose federal contracts. How would you handle that?
I would look at what the issues are at large and what the administration is asking, and I would make a judgment on what is the value of that, and am I standing up to the principles that I tell every employee at the firm? That are we living those principles every day? Are we doing what we need to be doing, or is there something that in my past that we needed to mitigate? So I don't know the circumstances about any of the law firms. BlackRock has, our job is to be working on behalf of everybody. Last year, clients were awarded us $631 billion of new money. On Friday, we'll announce our first quarter. Our job is to prove every day that we're working for our asset owners. And so I couldn't answer that question how I would play it.
You were at the White House last month to see the president after BlackRock clinched a multi-billion-dollar deal to buy the port operations from a Hong Kong company, CK Hutchison.
I'm glad you said Hong Kong.
It's important, right? That deal was important because it included two ports in Panama that the president had accused of being controlled by China. J.D. Vance was at this meeting, Mark Waltz was at this meeting, Elon Musk was at this meeting. What did you learn from them?
I'm not going to talk about the meeting. Let me just go back on the TikTok of the deal. Hutchison has been talking about for 2-3 years on the idea of possibly entertaining an idea of selling their ports. If you look at their stock price, their stock from our evaluation was trading at 30% of book. It was trading around a 26 billion market cap at that time, and they saw the valuation of the ports to be worth at least 22 billion of it, and they have many more enterprises within the whole complex.
I'm gonna pivot over to Times Radio here. They just published 8 minutes ago about Trump tariffs, so let's play that.
Snap your W-2 and file your taxes 100% free. Plus, get your biggest refund. File free now. Roughly 37%.
This has cried havoc and let loose the dogs of war that has created complete mayhem in the global markets. And the reality of it is this, that quite apart from stock markets going down, you're going to unleash huge inflation, particularly on the US consumer.
Now, don't panic is the instruction from President Trump after markets dropped sharply today in reaction to his tariffs. Now, in the last half hour, we've already told you the New York Stock Exchange opened and continued that trend. In the UK, the FTSE 100 plunged by 6% this morning. But the American president is showing no sign of changing his mind, telling his fellow Republicans not to be a panican, which he defines as a new party based on weak and stupid people. He says his tariffs should have been brought in decades ago, and that if the US is patient, capital G greatness will be the result. Not everyone is still with him, though. One billionaire supporter warning of a self-inflicted economic nuclear winter. Terrific. Jack Barnett is the Times economics correspondent. Right, Jack. We should just say, actually, the Dow Jones did fall fairly dramatically when the stock exchange opened, but it seems to have recovered slightly. Anyway, what is the latest? What's going on?
Well, I'm just marking them both. I've just sort of got the ticket up in front of me at the moment. The FTSE is still down nearly 4% from this morning, which is obviously still, it's pretty sharp, but it's obviously recovered some of its losses from this morning when it was down over 6% at one point. The S&P 500 is down about 2%. So the sort of really pronounced losses that we got immediately at the open in the US this afternoon, and also at the open in Europe this morning as well, probably pared back a little bit. But I think the overall sentiment is, again, I know we sort of spoke about this last week, and lots of people have hammered home this point, is that there is still a lot of uncertainty whether or not this stuff is going to stick around, because lots of analysts this morning, they've also had a chance to digest the news which was announced last week from the president. The unanimous decision is, if these tariffs do stay, the likelihood of a recession in the US and probably across the global economy is pretty substantial.
But as we've just said, as I've just said, there is no indication that Donald Trump is going to change his mind. In fact, he has form on this. He tends not to change his mind. And he's been a tariff fan for decades. So is he honestly going to front up and say, you know what, I got this wrong? Because that's just not him, is it?
No, it's not. And he has been for decades, obviously, a massive proponent of this tariff policy in order to balance what he thinks is imbalance in the global trading system. I mean, there is some logic behind the sort of method to the madness underneath it. I mean, the theory behind all of these tariffs is that, you know, since the 1990s, there's been a huge expansion of global trade. Lots of production has moved over to Asian economies, and there was a massive expansion of global trade after China sort of entered the global trading network in the early 2000s. That was very, very good for the US because it meant a lot of their big companies could sort of tap into low-cost labour production over in Asia. That's why you've seen a lot of US stocks sort of lead the way over the last 15 years, certainly since the 2008 financial crisis. What these tariffs are trying to do is just make it more costlier for companies to produce outside of the US. So it kind of changes the indicators as to where you should, you know, create your manufacturing base. It should, in theory, raise the incentive for you to create, you know, to produce a new car or a phone in the United States. So there is some method behind the madness. I think the thing that analysts are very, very shocked by is how quick and sudden and sharp that he's gone with some of these policies. You know, there was an argument to be made that he could have phased it in a bit more gradually. It may not have triggered the market declines that we've seen today, but I think there's, you know, one thing President Trump does not do is nuance and finesse.
Well, I think you're right there. Jack, thank you very much. Jack Barnett, who is the Times economics correspondent. Well, let's talk now to Lord Billamori, the crossbench peer, former president of the CBI and the founder of
Before we do that, please go to my store, the-studio-reykjavik.com, and take a look at this stack that will help with your bone structure and your cardiovascular health. Vitamin D helps to absorb calcium. It works really well when you take it with magnesium. You can take it with my vitamin C magnesium or my magnesium and zinc or the Boomer Boost. That all three of those products have magnesium in it. Now, vitamin D3 helps to absorb the calcium. It's also a cofactor for gene expression. That's very important for your cells. And it helps to get cells to go into apoptosis. Vitamin D3 also works well with K2, MK7 molecule. And what that does is it'll help to absorb the calcium. All right. If you're doing resistance training and you're taking in calcium, drinking milk or calcium supplements, doing that resistance training will allow you to build more bone density. Now, D3 and K2 together will also help to slowly pull out calcium buildup around plaque and prevent new calcium buildup from forming. So that's how it helps the cardiovascular health. Now, nattokinase, you can stack it with the D3, the K2, and nattokinase helps break up clots. It's fibrinolytic. Also, nattokinase helps with your lipid profile by helping lower LDL levels and increasing your HDL levels. That's important because a better lipid profile means less plaque buildup. So please go to my store, the-studio-reykjavik.com, get the D3, the K2, the nattokinase, take them together, and it's a dual purpose. It helps with your bones and will help with your vascular system to stack. Make sure you do resistance training. Now remember, nattokinase is for the vascular health. And D3 works better when you take it with magnesium. If you take magnesium every day, that's important. And you can get that by taking my vitamin C, magnesium, zinc, magnesium supplement, or the Boomer Boost. So please go to my store, the-studio-reykjavik.com, get the D3, the K2, the nattokinase. If you spend $150 or more, you get a free gift until supplies last. Use discount 5 and get $5 off any order.
beer. A very good afternoon from us, Lord Villamoria. What would you like the UK government to be saying today and then to do?
Yes, let's keep this in perspective. I mean, the last time we had a really bad, the worst stock market crash in living memory was in 1987, and that's when the FTSE crashed in over 2 days by 23%. Here we're talking about 4, 5, 6, and in certain parts of Hong Kong 13%. It's all terrible, but that's the worst that we've had. So putting it into context. Next, the United States is looked upon as the guardian of the free world. I mean, with the behavior at the moment, it's destroying the free world. It's not just what you do, but how you do it. If you go back to Liz Truss, her idea for growth was good. Her idea to lower taxes was good. It's the way she went about it that spooked the markets, and she lasted 49 days. Well, here, Donald Trump wants to make a point, and you could argue he has a point, that America has low tariffs and other countries have high tariffs, and it should be a fairer, more level playing field. But let's look at this, please. This is cry havoc and let loose the dogs of war that has created complete mayhem in the global markets. And the reality of it is this, that quite apart from stock markets going down, you're going to unleash huge inflation, particularly on the US consumer. And we've got an integrated market where it's not as simple as importing one product and selling it in the United States. It's integrated.
Your child is awesome. They're curious, confident, and full of wonder. We help guide your child here so they can be prepared here. Kitty Academy Educational Childcare.
What's going on here? Have you seen their detection time? And their NTTR is to die for!
United States, it's integrated. Each product has different parts that come from different countries. So this affects the whole world. So it's not going to work. And we've got to work. And the other thing is, you can't, with Liz Truss, she went in 49 days. Donald Trump is here before the American Constitution doesn't enable you to just get rid of a president if you don't like them or don't like what they're doing. He's here to stay. So this is going to be very difficult where the whole world has to work together because America makes up 13% of world trade. Let's keep that in perspective.
Yeah.
80-70% is all the other countries.
I'm sure everybody hears you. Basically, it's Liz Truss with cheese on top, isn't it, at the moment? When you say it's not going to work, can you just flesh that out a little bit? What do you think that means for business here in the UK?
Yes, and this is the classic, no one is an island and everyone is integrated. Here with us in the UK, we're perfectly poised. If you look at this positively, we had very low tariffs with America, just over 2%. America actually had very low tariffs for we're concerned, just over 2%. Now for us, it's gone up to 10%. And for automobiles and steel, 25%. So for the automobile sector, straight away, Jaguar Land Rover stopped exporting to the US. This is going to be really, really painful for our luxury car makers. But on the whole, if we keep cool and we take the high ground, we're respected as a trading nation. We're still the 6th largest economy in the world. As chairman of the International Chamber of Commerce, the ICC UK, we're suggesting to the UK, we're focused on trade. Let's modernize our trade. Let's go for digital trade. What takes 3 months of paperwork, do it in 1 hour. Let's get trading costs down by 80%. Let's actually put 24 billion pounds, 25 billion pounds more in trade growth in the UK economy. So our country keeps talking about growth. Now's the time to put in measures to actually increase growth, to show that we're a stable nation. We're not going to pick a fight with the United States of America. Please keep in mind, the United States economy is a giant economy. All 27 EU countries, plus the UK put together, the 28 countries, the American economy is bigger than all of us put together. We don't want to pick a fight with them. Let's work with the rest of the world. And the United States and the EU, please, let's never forget, Brexit was a huge mistake. It was an act of self-harm. The EU still makes up 45% of our trades, goods and services, imports and exports.
Yeah.
So we need to keep working closely with the EU.
And yes, Sir Keir Starmer has already said when he's talking about trade markets that we're going to need to really maximise. The EU is obviously there. I'd like to pick you up though, just on what you said about being able to change the way that we trade. You say that we could change that by 80% if we went completely digital. I confess I don't really understand what you mean by that.
Oh, it's so simple. At the moment, here we are in a modern, digitalized internet world that is now going AI, and soon we're going to have quantum, and the world trade is based on paper. And that paperwork can take 2 to 3 months of transaction time and cost can be cut to 1 hour. And our calculations are, the UK, have actually launched digital trade. It was the International Chamber of Commerce that launched digital trade. I launched it last year in the City of London. It's something for the whole world to take advantage of, and the UK can take a lead on that. And our calculations are very clear: 80% reduction in trade transactions.
So you literally mean for every company to be able to be using software instead of using an old-fashioned analog method. Are you saying that the government should be helping out in making that possible for every business? I mean, surely there aren't very many businesses who are literally still getting a piece of paper, photocopying it, stamping it, and sending it off with a stamp.
When it comes to trade, unfortunately, it is still as antiquated as that in many ways. And shipping costs will be reduced by 18%. Workforce productivity increased by 60%. This is all proven. The government can take a lead on this and get other countries to work on this, and the whole of global trade will benefit from this. And that's where we can be positive about a situation like this, where we can take the lead.
I also wanted to ask you about some of the things that Sir Keir Starmer said just in his speech at Land Rover this afternoon. And, you know, the guy is in a bind. He is trying to sort out an awful lot of things at the moment. So let's just cut him some slack somewhere. But these very confusing phrases, Lord Villamoria, now is the time for cool heads, but it's also the time for urgency. We are living in an age of security, but the future is in our hands. What do you make of those kind of sentiments? Did you want to hear something different from him today?
The reality of it is this. The previous government, led by Rishi Sunak, put up taxes to the highest level in 70 years, including corporation tax from 19% to 25%. And this government, since they've been in government since July last year, have gone much further with £40 billion of tax increases. Some of them that hit yesterday, the national insurance increase of £24 billion, the tax on jobs and tax on just about every industry. So they've not been tax-friendly or investment-friendly, and they keep talking about growth. And then on top of that, you've got the tariff wars inflicted from outside, from the United States of America. So what are you going to do in a time like this, when you've got an anti-growth policy and you want business to survive under fire from all around the world? This is when the UK government has got to be bold and say, we're going to help you business. Actually, when we say we're not going to increase taxes, we want to be a magnet for inward investment. This country was one of the 2 largest recipients of inward investment in the world. Since Brexit, that has not happened. That has changed. We need to go back to being a magnet for inward investment, and that means having tax-friendly measures, because if you support businesses, it's the businesses that are going to grow, that are going to pay the taxes, that pay for the public services and the desperate infrastructure improvements that we need as a country.
Right. How do you think we look at the moment on the world stage after this massive kind of etch-a-sketch since Donald Trump's announcement about tariffs? Why would somebody look to us as opposed to some of our European neighbours and say, that's absolutely the country that I'm going to head towards?
Because the UK, before Brexit, was seen as the gateway to Europe. It was seen as a bridge between the United States and Europe. We're seen as the United States' best friend historically. And by the way, that should not change because of this. They should still be our best and strongest ally. This is where we as a country are in that unique position where we're in between Europe and America, where we're seen as a country that has phenomenal institutional strength, a reputation for trust and fairness, a judicial system that people respect, the financial services, whatever happens, we're one of the top 2 financial services centers in the world. Our universities are the best in the world, along with the United States of America. We should be seen as a safe, stable haven. Yes, the world has not liked this government's policies with regard to raising taxes, and our economy is not doing particularly well at all.
Yeah.
But
So that's
there's other factors going wrong.
But that's the problem, Lord Villamoria, isn't it? I mean, actually, you know, the Labour government does have other tools that it could be utilising. You could have a reversal on the increase in employers' national insurance contributions because this is a time of crisis, and maybe that would be a good thing, a good message to send out to employers across the country. But that isn't anything like what we've heard today, which is actually quite reassuring if you were the type of person who is considering buying an EV in 2030. But that's not everybody, is it?
No, they've got to be realistic and practical. And again, with this transition to net zero as well. Yes, of course, we want to be able to go down that route, but it's a transition. You don't do it in a way where at the moment we have the highest energy costs of just about any country in the world, which makes many of our industries, including steel, chemicals, almost unviable. So we've got to be competitive and we've got to be practical. And we do have to propose lower taxes, but do it in a way that the markets respect, not do it in a way that Liz Truss tried to do with irrational exuberance that spook the markets. If you do it in a sensible way and convincing, we lower taxes, we're going to get the growth, believe in us, invest in us, that's going to make us an attractive investment destination.
Quick answer to this, and I know it's a massive question, so that might not be possible, but do you really think that we can stay best friends with America?
Absolutely. We have to do that. You know, presidents come, presidents go. The United States of America will always be our best friend. And I said right at the beginning of this, it's the guardian of the free world. At the moment, it's not behaving like that. We've got to behave as the guardian of the free world because we have to take that high ground, and especially with regard to trade. And I believe America will come back online. No one in America is going to put up with jobs going, costs going up, losing money, pensioners losing money, investors losing money. This is not good. People didn't vote for that.
Yeah, well, you're right there. None of that is in the American dream. Very good to talk to you. Thank you for your time this afternoon, Lord Villamoria, crossbench peer and the founder of CAPE.
Please go to my store, the-studio-reykjavik.com. Let me talk about this great stack that will help with your muscles and with your brain. Myotrol helps with gene expression for building muscle and maintaining muscle. When you turn 40 years of age, or you're older, you're going to have problems building muscle and maintaining muscle. It's called atrophy. All right, so do some resistance training. Take Myotrol. It has flavonoids, polyphenols, and lignans to help with the gene expression to build muscle. They'll also help with the health of your mitochondria. You need lots of mitochondria to maintain muscle. So take Myotrol every day to help build that muscle. This stacks really well with Gladiator Barley to help build that muscle. It'll supercharge it. Now, let's talk about brain health now. Clarity Factor gets rid of brain fog. It'll allow you to concentrate on tasks such as at work or in school. Even if you're retired, it'll allow you to focus. And it's going to get rid of that brain fog. Clarity Factor will also help to support your memory. And what's going to happen is your neurons are going to be firing more. When your neurons are firing more, then you're going to have better neural activity and neural connection, positive neuroplasticity. Learn new things, read, write, talk to people, get better blood flow by working out. And these are all positive things, including the proper supplementation to protect your neurons and to add those neural connections. That way, you're going to be able to think faster, you're going to have better memory, and you're going to be able to concentrate on the tasks on hand. There are other supplements that I have that I'll be talking about that help to protect the neuron. But Clarity Factor is really important. Stack it with Myotrol, and that way you're targeting two different systems. You're targeting your musculature and your brain. So please go to my store, the-studio-reykjavik.com. Get the Myotrol, get the Clarity Factor, drink it with filtered water, take it every day, and get healthy. If you spend $150 or more, you get a free gift until supplies last. Use discount 5 and you get $5 off any order. Please go to my store,
the-studio-reykjavik.com. The link is in the description of this video and all my videos. All right, let's go to Bloomberg. This is balance of power.
A major visit to the White House here in a news conference. We will be hearing from both of them when they have their Oval Office pool spray with the press pool, and then in the East Room, a formal bilateral news conference that we'll bring to you live here on Bloomberg TV and radio. That's scheduled for a couple hours from now.
That's scheduled for right now. Live check on the markets. We'll send things over to Charlie Pellet of the New York GETTR.
Hi, thank you very much, Kelly and Joe. Indeed, volatile Monday here. Back to work Monday, another manic Monday with the Dow, the S&P, NASDAQ, all very much in the red. Stocks getting whipsawed by a flurry of headlines around President Trump's tariff war, and today's news flow doing little to appease investor concern about the outlook for the global economy. Right to the numbers here with the S&P now down 45 at 5,028. That is a drop of 0.9%. We've got the Dow down 581, drop there of 1.5%. NASDAQ right now lower by 0.5%. 10-year 4.14%, the 2-year 3.71%, and we've got spot gold down $64 the ounce, below 3,000 now, 29.73, down 2.1%. Crude at 61.22 a barrel, down 1.3%, and Bitcoin now down by 1%, 77,945 on Bitcoin. Bottom line here, S&P 500 index extending its sell-off from a record to almost 20%. And we did see a 7% move in the S&P 500 index today. Tesla shares are moving lower. Tesla continuing to slide, dropping below a price at which Commerce Secretary Howard Lutnick predicted those shares would never fall to again. Tesla today is trading lower right now. We got Tesla down by 4.4%. Balance of power continues right now. And back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much, sir. We'll get back to Charlie in about 10 minutes for the latest on Wall Street here. We've got our eyes trained on markets as they are keying off what's happening here in Washington with a lot of news today on tariffs. We walked through the fake news portion already. According to the White House, reports rumors of a 90-day review are just that, fake news. The president, though, taking to Truth Social a bit earlier to threaten an additional 50% tariff on China. And it takes place as Israeli Prime Minister Benjamin Netanyahu pays a visit to the White House today to talk about Israel's higher than expected 17% tariff. They're going to be holding forth in the Oval Office a short time from now, and we'll hold a joint news conference later on. That's where we start this hour with Bloomberg's Tyler Kendall on the North Lawn at the White House. Tyler?
Yeah, hey Joe. Well, right now we are waiting for Israeli Prime Minister Benjamin Netanyahu to arrive here at the White House. You might be able to see it over my shoulder for our radio listeners. There's currently an honor guard lined up here in the driveway of the White House North Lawn to welcome him as they begin those negotiations. Now, one theme that we're seeing emerge when it comes to the potential tariff negotiations is that it appears President Trump wants to do them in person. He confirmed earlier today that he had spoken to the Japan Prime Minister and that a team of negotiators would be coming to Washington to further their discussions. Now, of course, as you've been discussing, the biggest story today appears to be President Trump threatening this additional 50% tariff when it comes to China. Critical here, our understanding, according to his Truth Social post, is that this levy would be enacted on top of existing levies, the 20% tariff that's already in place against Beijing, and then, of course, that 34% tariff that we are expecting to go into place on April 9th.
Well, in addition, with reciprocal tariffs on all other partners, Tyler, the president also talked about other ongoing conversations with different countries that he is having. Is there any indication from the White House that deals are forthcoming before the Wednesday deadline?
At this point, the White House is holding pretty firm, right? Senior administration officials had confirmed yesterday that more than 50 countries reached out to the U.S. to negotiate. The question being, what will it take for President Trump to get to the negotiating table? He's previously said that he needs to see something phenomenal, right? And what phenomenal means remains to be seen, although yesterday he did give some indication to reporters that they're really focusing in on trade deficits. That could be very difficult for some countries, particularly ones that we rely on for low-cost goods, to end up meeting in order to get some sort of deal done. But Joe and Kaylee, this White House really dismissing investors' fears. I want you to take a listen here to what President Trump told reporters yesterday on Air Force One, saying to hold tight, this is all about long-term gain.
What's going to happen with the market, I can't tell you, but I can tell you our country has gotten a lot stronger. And eventually, it'll be a country like no other. It'll be the most dominant country economically in the world.
Treasury Secretary Scott Bessent yesterday dismissed recession fears, said he's not pricing in one, even as big banks revised their forecasts when it comes to it. And we're starting to hear those Wall Street executives push back, including JP Morgan Chase's Jamie Dimon in his annual shareholder note, blasting the policy and saying he hopes to see a quick resolution. Remains to be seen exactly what that will be, but for now, this White House is holding firm.
All right, Bloomberg's Tyler Kendall live on the North Lawn at the White House, where we are seeing on Bloomberg TV the honor guard passing as we await the arrival of the Israeli Prime Minister Benjamin Netanyahu. Thank you so much. Now, as Tyler was alluding to, the administration's response to financial markets, essentially saying that it's not a big deal. We certainly have seen a great deal of volatility, a 7% intraday swing on the S&P 500 today, and we want to get more context as to what exactly is going on in equities. Ryan Stelica, Bloomberg Equities reporter, is joining us live from Chicago with more. So, Ryan, obviously right now we're not looking at losses as steep as what we experienced at the end of last week, but we have still seen some pretty incredible moves.
Absolutely. Volatility is kind of off the charts today. We've seen just some enormous swings in companies. There was a rumor today about a potential pause that caused stocks to spike, and then when that was sort of downplayed, we saw them retreat back lower again. Everyone is very antsy. Everyone is, shooting first and asking questions later. Everything is being very driven by headlines, by rumor. It's an extremely volatile market right now.
Conventional wisdom seems to be beware the dead cat bounce here. Ryan, I'm not sure your thoughts on this. It was encouraging, even though it turned out to be a rumor this morning, that there was some bid under stocks here. We heard from Larry Fink last hour. He said it's more of a long-term buying opportunity than a selling opportunity, but that doesn't mean the market can't drop another 20%. What would that mean?
Well, people are really trying to suss out what all these tariff implications really mean for the economy going forward. There's a lot more talk about a recession than maybe we even heard, a week ago. I mean, everything has changed very dramatically in just a couple of days. As far as the market is concerned, we have a company like Apple that at one point today was on track for its biggest 3-day drop since before the iPod was released back in 2000. So this sheer scale of the selling right now is something to behold. And, it certainly would be possible that we would get some kind of a bounce. Maybe that's a short-term bounce. Maybe this does end up being a longer-term opportunity. But right now, there's still so much uncertainty that it's hard to, make any calls one way or the other.
Well, and when we look at kind of regional exposure, if you will, I'm looking at the NASDAQ Golden Dragon China Index right now, down 7 percentage points as the president is threatening a tariff as high as 104% effectively on all Chinese goods. Are there other pockets of the market, Ryan, like that you're watching?
Well, I mentioned Apple, and Apple is really in the crosshairs of tariffs right now. That's what we are sort of focusing on here. They do so much of their manufacturing in China, in Vietnam, in these countries that are really seeing the brunt of the sort of tariff impact here. And this is a company that we've already been having a lot of concerns about in terms of their growth expectations, their inability to grow as fast as some of the other mega cap peers. It was already trading at a valuation that was seen as elevated by historical standards. So there's really a lot of reasons to be selling a stock like Apple right now. There's sort of fewer reasons to buy unless you are taking a longer term kind of point of view. But I would say a lot of these companies, especially within big tech, people remain pretty positive on them in terms of their their cash flow, their balance sheets, their dominance in the markets they operate in. So you will certainly find people who remain optimistic about big tech. But I think right now, the short term is so uncertain that everyone is, like I said, just extremely cautious and very prone to be selling.
Ryan Stelica, Bloomberg Equities reporter in the teeth of the sell-off. Ryan, we thank you so much. Keely, it's pretty remarkable to see the VIX.
All right, right now, the S&P 500 is about 1.7% down. Please go to my store, the-studio-reykjavik.com, and get this stat that will help with your neural health. Let's talk about it. All right, NAD Plus supplement will boost up your NAD Plus levels. That will increase your energy. That will also help to repair your DNA damage. When you get older, you accumulate more DNA damage, and it's harder to repair it. So you need higher levels of NAD Plus. And NAD Plus helps to protect your neurons. Extremely important once you turn 40 years of age. So if you're 40 years of age or older, you need to be taking NAD Plus. And ubiquinol.
Ubiquinol is the most bioavailable form of CoQ10 that you can buy. Ubiquinol will help to soak up free radicals because it's an antioxidant. They'll also help with the health of your mitochondria. Your energy levels will improve. You'll have more ATP. That's really important for your cells. And ubiquinol helps to protect your neuron. So what you want to do is stack this together. So you're protecting your neurons, you're helping repair your DNA damage, you're soaking up free radicals. This is a great stack. Please go to my store, the-studio-reykjavik.com, get the ubiquinol and the NAD+. Again, ubiquinol is the most bioavailable form of CoQ10. Most people that take CoQ10, you're taking the wrong stuff. Get the ubiquinol and get the most bioavailable CoQ10 that you can get. Stack it with NAD+, and that's a great way to protect your neurons. It's a holistic approach. It's about proper diet, proper exercise, proper supplementation. Do the 4 modalities of exercise: cardio, resistance training, do exercises that will help you stretch, and also balancing exercises are really important to activate that cerebellum. All 4 modalities are extremely important. Filter your water, stay away from processed foods, get proper sleep, and have mindfulness or spirituality to bring down your central nervous system out of sympathetic and into parasympathetic. The more times that you're in parasympathetic, your heart rate will be lower, your blood pressure will be lower, your cortisol levels will be lower. So please go to my store, the-studio-reykjavik.com, apply this holistic approach, get the supplements, use discount 5, you get $5 off. If you spend $150 or more, you do get a free gift until supplies last.
Rick was the 3rd largest recipient. China, rather, was the 3rd largest recipient of your global exports, which you just described here, $154 million in gross sales. How do you quantify what's about to happen here to local business?
Well, if you look at 4 years ago, when we had the first taste of the trade wars, President Trump responded by urging Congress to provide additional assistance to farmers to weather the storm. And he also negotiated a deal 4 years ago with the Chinese to buy an additional $50 billion in U.S. agricultural products. I'm not sure exactly off the top of my head how well the Biden administration followed through on that, but he remembered who his supporters were and he stood with us. We'll see this time, but you have to have faith. We'll see in the next hours, days, weeks what happens. But movement, it would seem, from our trading partners around the world, might, the president says he's had inquiries from 50 different countries wanting to address the tariff issues. Again, this is a sledgehammer approach, but the system has generally worked against us from a manufacturing point of view for decades. Let's give it a try.
Yep.
Congressman, one of your Republican colleagues in the House, Congressman Don Bacon, has introduced legislation that looks a lot like the bipartisan legislation that was introduced in the Senate, essentially requiring congressional approval of the president's tariffs. The White House today has issued a veto threat on that Senate bill that was co-sponsored by Senators Chuck Grassley and Maria Cantwell. Why veto something that is actually technically, according to the Constitution, just you guys reclaiming Article 1 authority that you're entitled to?
Well, I'm very jealous of congressional power under the Constitution. I'm not sure how we got to this point of delegating this much to the president. It is a discussion that has to be had. I'm not sure that right now, in the depths of the trenches, economically, is the battle is the place and time to do it.
Just want to mention a breaking headline here on the terminal, Congressman. It appears that President Trump's news conference that had been scheduled for a couple of hours from now with Benjamin Netanyahu has been canceled. They are going to take some questions. I want to be clear when they meet in the Oval Office, but we're not going to have the formal bilateral news conference that we had expected. Congressman, that's just part of the story today that we're following with regard to these tariffs. And as Kaylee mentioned, now you've got essentially a veto threat coming from the White House here. Do you worry? Is your worst case scenario a war between the White House and the Congress? on top of a trade war?
I would tell you, Joe, my biggest concern just this moment, in addition to tariffs, in addition to trade wars, the House needs to pass the budget resolution. If the Senate is passed with our separate instructions so that we can get on with reconciliation, addressing the national debt, addressing spending, making sure that we don't have the most dramatic increase in taxes at the end of this year and the effect that that would have on the entire economy. There are a lot of pieces in play right just this moment. We need to focus.
Well, of course, one of your focuses, sir, is you chair the new task force on monetary policy, treasury market resilience, and economic prosperity. And given how keyed in the market seems to be to the words of Federal Reserve officials around this, I wonder if you are anticipating we may see intervention from the central bank, because right now, at least in terms of market functioning, everything looks like it is acting appropriately. The systems are working. And short of that, is there really a need for Fed intervention here that you see?
Well, I have faith in Chairman Powell and the entire Board of Governors of the Federal Reserve System. I think they, using that the spirit of the 1913 Act, will make the appropriate decisions on interest rates, in fact, monetary policy. We'll just have to see over the course of the days. This is a world where we seem to live moment by moment, not day by day traditionally. We'll see where they go. And by the way, on the task force, our next hearing this week will address U.S. Treasury debt in the monetary system. How do you market, how do you sell all of the Treasury notes, bonds, and bills into the market when you have 7-8 times more paper than we had 20 or 30 years ago, and you have half the market makers? This will be an introduction to an introductory meeting so that the members of the task force can come up with speed with experts in the field. But yeah, you talk about timing, critical nature, a task force focusing on the Fed and Treasury debt. I can't imagine two more important issues for the long-term and intermediate and short-term future of the country than that.
Well, when we think about the short term, Larry Fink was talking to Bloomberg last hour. You might have heard the conversation, Congressman. He's casting doubt on what the market sees as the likelihood of several, maybe 4 interest rate cuts this year, even though he says we're probably in a recession right now. If that's the case, how about an emergency rate cut today?
That's not really.
It's so asinine for someone to say we're in a recession right now, because you got to have 2 consecutive quarters of negative GDP. Please go to my store, the-studio-reykjavik.com. Get the resveratrol. This will help to soak up free radicals because it's an antioxidant. It's going to help the health of your mitochondria. So it's going to help with boosting up energy levels. Resveratrol helps to get rid of cells that are in senescence, and resveratrol helps with youthful gene expression. Really important. I've been taking resveratrol for decades. So this stacks really well with NAD plus supplement, ubiquinol, C60, NAC. So please go to my store and take the resveratrol and stack it. Now let's talk about C60. C60 is a very potent antioxidant. You take a teaspoon a day, every day. And what that will do is it's going to soak up free radicals, boost up your energy levels, help with the health of your mitochondria, reduce stress on the cell. The cells are going to perform better. Therefore, your tissues are going to perform better. And therefore, your organ systems will perform better. Your immune system will perform better. Your endocrine system will perform better. Even your neurons will perform better. Why? Because your neurons have lots of mitochondria, and it needs lots of ATP, and it gets lots of stress. So if you soak up the free radicals and reduce the stress in the cell, and you allow the health of the mitochondria to improve, you'll have more ATP to make neurotransmitters, to allow for those neurotransmitters to be fired from the neuron, and therefore you'll have good neural connections. So please go to my store, take the C60, extremely important to take. Very strong antioxidant is part of my anti-aging protocol, and it will help to boost up your immune system. Now you take it with, you have to take it with a lipid, so that's why it's in an oil. So C60 is a 60 carbon molecule, looks like a soccer ball, a fullerene, and it has to be suspended in an oil because it's lipid soluble. You can get it in MCT coconut oil, extra virgin olive oil, or avocado oil. You can get it in a 2 ounce, a 4 ounce, or an 8 ounce configuration. It is cheaper per ounce to get the higher ounce configuration on my store. Now, take a teaspoon a day, take it on an empty stomach for best absorption. If you work out, take it before your workout. You'll soak up the free radicals that your workout will produce, and you will notice that you are recovering quicker from your workout. Take a teaspoon a day, every day. Very important as part of my core protocol. Max 35 or max 14 for the first pillar. The second pillar, soak up those free radicals with C60. The third pillar, turmeric, ashwagandha, and lignans to boost up the immune system and bring down inflammation. And the fourth pillar is Boomer Boost to boost up your energy levels and your metabolism. Go to my store, spend $150 or more, and you will get a free gift until supplies last. Help support my work. This stuff that I'm doing is for free. All right. Get the products from my store, help with your health, help support my work. It's a win-win situation. Please go to my store, the-studio-reykjavik.com. The link is in the description of this video. Use discount 5 and you get $5 off. If you want to save even more money, buy my anti-aging boxes and longevity boxes. There's a built-in discount for each box. Please go to my store, the-studio-reykjavik.com.
We go to Washington, back we go to Balance of Power. Once again, your hosts, Joe Matthew and Kelly Lyons.
All right, Charlie Pellet in New York, thank you so much. Here in Washington, we're keeping an eye on the White House as we anticipate the arrival of Israeli Prime Minister Benjamin Netanyahu, who's set to meet this afternoon with President Trump. The one item that was previously on the schedule has now been removed. There will be no joint news conference in the East Room as was previously planned. So for more on that, we go back to the White House where Bloomberg's Tyler Kendall is joining us once again. So Tyler, it's still going to be an opportunity for them to take questions, I guess, just in a different venue.
Yeah, hey, Kelly. Well, it is breaking news per a White House official. No more press conference at 2:30 p.m. Eastern. But as you say, we are still expecting the Israeli Prime Minister to arrive here at the White House shortly, and they will still hold that bilateral meeting in the Oval Office. Typically how this works is that they are open at the beginning to press to ask some questions, and we get that footage back live. So we'll have to see. As of now, that does still appear to be on the table. We are still waiting for an exact reason as to why that press conference ultimately was canceled. Now, we know, of course, that tariffs are still expected to be a top topic today. I was here yesterday when Israeli Prime Minister Benjamin Netanyahu did arrive here in Washington. There were reports that he had already started the negotiations with some top senior administration officials when it did come to the tariffs. As you well know, Israel had lifted most of its tariffs in the run-up to April 2nd in a bid to try to get ahead of it, try to strike a deal early, and they still were slapped with that 17% levy. Now, our Bloomberg News reporting, according to sources familiar, say that Netanyahu had called President Trump on the phone to try to negotiate a deal. President Trump told him that he should come here in Washington to negotiate in person, and that is how this visit was spurred today. So we're still going to have to wait, see further details, other things that we know, other agenda items, of course, the ongoing war with Hamas and shared concerns when it comes to Iran.
Bloomberg's Tyler Kendall live at the White House, shoulder to shoulder with the color guard as we anticipate the arrival of Benjamin Netanyahu. As Kaylee mentioned, the joint news conference has been canceled. We will hear from these two leaders in the Oval Office, and that's where we begin with our signature panel today. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. Rick is our Republican strategist partner at Stone Court Capital. Jeannie, Democratic analyst and senior democracy fellow with the Center for the Study of the Presidency and Congress. It's great to have you both here. An important day for the markets, an important day at the White House, Jeannie. To know that this news conference has been canceled gives the White House more control over the conversation with reporters. I'm wondering your thought on the strategy here, because reporters will be allowed in the Oval Office, but that's a very different affair than having a formal news conference in the East Room.
It absolutely is. And for somebody who for the last 3 months has been speaking to reporters openly day after day after day, sometimes multiple times a day, as you both know,
now,
this is quite a switch.
Jeannie is a study of presidency and Congress, all right, at the center, the center of study of presidency and Congress. And she's a Bloomberg contributor. Now, Rick Davis, he manages money. Now, you have a market that is in turmoil. Why does he have the time to go on Bloomberg and talk about why he doesn't like Trump? Shouldn't he be talking to his clients and navigating them through this tumultuous market? Maybe Rick Davis doesn't do much over in managing money over at the firm that he's at.
Forward, and that's why we're seeing a cancellation.
Well, but to Jeannie's point on whether or not this is a negotiation, Rick, you also have the president at the end of last week talking to the leader of Vietnam, who said he would drop all tariffs on U.S. products. You have Japan apparently in conversation with the president today. So clearly talks are ongoing. And as we have an eye here on Bloomberg TV and on YouTube on the White House, we see President Trump awaiting another conversation as the vehicle has just pulled up with the Israeli Prime Minister Benjamin Netanyahu inside it. We're now seeing, Joe, those two leaders shaking hands.
Yeah, quick handshake under the portico. This is not a formal arrival on the south portico, but they're in fact right at the entrance to the West Wing. Both wearing matching suits today, it looks like.
Red ties.
Benjamin Netanyahu got the cue on the red tie. Indeed, they are now heading back into the West Wing for an Oval Office meeting around the top of the hour. We expect to have an ear on that.
Yeah, one of the questions reporters just attempted to shout at them, will you discuss tariffs on Israel? I think we know the answer to that question, as we understood that. It's one of the primary objectives of Netanyahu's visit today is to have that conversation. But if that conversation is happening, Rick, do we not define that as...
No, let's see what Rick's title is.
Yeah, I think by definition, him being here and the tariffs are going to come up, that's a negotiation because
this guy's a
clearly
clown.
That's what Donald Trump wants it to be. All weekend we had cabinet members hitting Sunday shows saying, hey, we're going to work out deals on all of these things. Be patient. Let us do our work.
Stone Court Capital LP, Bloomberg contributor, Rick Davis.
Shouldn't he be managing money for his clients in the middle of this tumultuous market? Why the fuck is he on Bloomberg?
Sit down in the Oval Office and work out a deal. I would be stunned that this visit does not result in some kind of good news about a reduced tariff between Israel and the United States, because that is what the White House desperately needs.
I'm willing to bet. I'm willing to bet that this week you're going to hear not just Taiwan, but about 2 or 3 other countries that radically reduce their tariffs or totally eliminate their tariffs to have trade with the United States by the end of this week.
Any number of administration officials yesterday giving us a bit of a confused idea on this. Peter Navarro, as recently as this morning, was talking about raising revenue from tariffs. He referred to them as tax cuts. But if you show up with a bunch of deals this week, we understand the phone was ringing all weekend. The president talked to Japan this morning. Now it's Israel today. Obviously, this isn't going to be a revenue generator. What's the market going to make of that?
Yeah, I mean, it is the uncertainty about what this is all about that continues. And while Donald Trump was winning, if you guys didn't hear, he won, as he said 5 times, the golf tournament this weekend. He sent all these folks out from the Sunday shows that Rick was talking about with mixed messages. Some of them talking about these 50 countries who are trying to negotiate. Then you also had Lutnick saying, no, there's no room for negotiation. So to me, there are 2 things here. Number one is there is a big break in the administration. You have some folks who have a more traditional view. This is negotiation. It's temporary. It's going to be over. Just wait and see. Bill Ackman, don't worry. Everything will be okay. And then you have other people like Howard Lutnick and like Peter Navarro who are saying, no, this is a remaking. And Donald Trump himself talks about a revolution this weekend. And that's the problem with Rick's hope that they come out with a deal. If you are a revolutionary and your base is waiting for you to bring manufacturing back and reshore, help all these forgotten men and women from this globalized economy, how can you then be negotiating out deals with your allies or your enemies? The 2 don't go hand in hand, and that's the problem, and that's what's creating all this uncertainty.
Well, and we know the markets don't love the uncertainty, Rick. It was interesting. There was some erroneous reporting earlier today, a suggestion that the White House would be open to a 90-day delay on tariffs. Saw the markets rally dramatically off the back after what opened, after opening in pretty steep loss territory, a 7% swing. And yet the positive reaction in the markets immediately slapped down when the White House itself pushed back and said that was fake news. What does it tell you that an opportunity to maybe alleviate some of the pain we've seen in the equity market was not one that the White House decided to take? Does that suggest that they do want to be seen as credible on this?
Yeah, look, I think in order to be able to get the kind of deals they want to get from a negotiated posture, they've got to show their resolve. And the idea that we're going to kick the can for 90 days, maybe
never
had been talked about, and someone leaked it who didn't know the final conclusion. But the bottom line is, it actually shows how quickly the market is prepared to
It came
respond.
from Ackman during the Asian session. Come on.
The quote progress reports on these tariff regimes, because they know that they've got an issue with getting into these, sort of recessionary levels in the market, and they're going to try and put their finger in the dike on this one. It does not do this administration any good to have the markets collapsing while they're trying to implement this weaker dollar, more tariffs, reset of the global economic program. And by the way, let's be clear, that's what this is. It's not just a tariff regime. They are restacking the global priorities based on what the strengths are of the U.S. economy and not anything else.
It's interesting that we're having this conversation after hearing from Bill Ackman, from Jamie Dimon, from Larry Fink today on Bloomberg. Jeannie, I wonder, you heard the veto threat from the White House earlier, this idea of passing a bill that would require congressional approval after 60 days on tariffs. Veto threat to the Speaker of the House, his ally. But it is, in fact, the CEOs and the executives who appear to have his ear. Is it the Ackmans and Dimons of the world who pulled Donald Trump off the course on more tariffs?
I really hope so. Somebody has to. I mean, I think there is a lot of wishful thinking here, but let's take a step back and remember, there is only one thing Donald Trump has been committed to publicly, and that is this tariff regime. It is going to be very hard for him to walk away from that. That is going to require the Larry Finks, the Jamie Dimons, the Bill Ackmans, quite frankly, the Ben Shapiros of the world. All of these folks, Elon Musk, out there saying this is a problem. And then, of course, Congress has a role, and I think we can't forget the constitutional role of the courts here, because the way in which the president did this, to declare a national emergency based on a trade deficit that we have had since the 1970s, is highly constitutionally questionable. So those are the three groups.
But it's okay to just gut our manufacturing and not have the military prowess that we need to build our Navy just in case we go to World War III in the Pacific? Come on, Jeannie. You're supposed to be an expert at this. Come on. She's bullshit. That's what she is.
Let's point on the role of Congress, Rick, in our final minute here. The White House, of course, issuing a veto threat of the bipartisan legislation that has been put forward in the Senate to claw back some congressional authority on tariff approval. Does that effectively kill that effort, or might they pass it anyway?
Yeah, it would be hard to get it on the agenda in the House of Representatives with a veto threat from the president. I think the speaker is still very much in league with the president on his priorities, even though I think they all are looking over their shoulder at the 2026 elections and what impact a declining market at the hands of Republicans is going to look like when they try to run for re-election. So there's a real tension right now in the House of Representatives about trying to maintain a majority through the midterms and still be able to do the bidding of Donald Trump. He's making them walk this plank, and I don't see any distance between the speaker and the president at this point that's going to cause a revolt by Republicans in the House.
Yeah, and the speaker's going to be preoccupied trying to advance budget matters this week anyway. Rick Davis and Jeannie Shanzano, our signature political panel, here with us on Balance of Power. Thank you so much, as always. And just to reiterate, we did moments ago see the Israeli Prime Minister Benjamin Netanyahu entering the White House for a conversation with President Trump. They will be answering questions later on from the Oval Office. No Eastern news conference, though. We'll have more next on Bloomberg TV and radio.
All right, market update. The S&P 500 is at 5,052, so that's really important. VIX is still elevated at 47.4. The Euro USD is trading at 1.09. Oil's trading at $61.30 a barrel. That's for WTI. The BITO is trading at 17.10, and the USD Japanese
yen is trading at 148.03. All right, let me plug Boomer Boost. Boomer Boost is the last pillar of my core protocol. All right, what does it do? It does multiple things. All right, it has 68 different nutrients. Take a look at the label, go on my store, read it very carefully. It is very comprehensive. This is a supplement that you take every day. Very comprehensive. You're going to see the benefits of this within 72 hours or less. Not joking. This works fast. All right. What it does is it boosts up your metabolism and you'll have steady energy throughout the whole day. That means you're going to be more active. You're going to have more vitality. You're going to have better sleep. And not just that, you are going to be targeting different systems like your heart, your vascular system. You're going to improve your brain function, your musculature, your strength. So take this every day. There's a big scooper. This is a month's supply. You take one scooper a day. You either take it for breakfast or for lunch. Mix it with soft foods like hummus or yogurt or applesauce. You can mix it in a smoothie or just with filtered water or with milk. But the point is to take it every day, and that is your lunch or your breakfast. Do that every day. You will lose weight, you're going to get healthy, and you're going to improve your brain, your heart, your vascular system, your musculature. And because you're going to have more energy, you're going to be more active. And this is a great way to now start working out. Do those 4 modalities that I've been telling you about. Cardio, resistance training, balancing exercises, and stretching. All 4 modalities are extremely important. If you just do weight training, you're doing it wrong. If you just do cardio, you're doing it wrong. If you're just doing stretching, you're doing it wrong. If you're just doing balancing exercises and yoga, you're doing it wrong. It's important to do all 4 modalities. In addition, make sure you drink filtered water, stay away from processed foods, get proper sleep, and learn new things, get that neuroplasticity going. And if you're detoxifying your body on a regular basis and you're doing all these, the holistic approach, you're going to get healthy and you're going to get healthy quickly. Use this, couple it with the other products that I've been talking about throughout this broadcast, especially the ones that are part of the core. And that's Max 35 or Max 14 to boost up your immune system, C60 to soak up free radicals, turmeric, ashwagandha, and lignans to bring down inflammation and boost up your immune system, and take it with the Boomer Boost. And that's a great stack right there. But there's other ways to stack this. So please go to my store and get the Boomer Boost. Now, it's important to take you can take the Boomer Boost by itself, all right? And you can take the barley by itself. Now, I have 2 types of barley. I have the Gladiator barley and I have the heirloom barley, all right? Now, what's the difference? Heirloom barley helps to detoxify your body, brings down inflammation, so that's obviously important for your vascular system and your immune system, and soaks up free radicals with superoxide dismutase. You get a big scooper, take 1 scoop or a half a scoop each day, mix it with soft foods or with a smoothie or with filtered water. Take it the same way you take the Boomer Boost. And take that every day. Take it every day for your breakfast or for your lunch. Hold on, let me drink some. All right. Take it every day for your breakfast or for your lunch. It's a high density protein. All right. Very, very high quality barley because it's heirloom. You can't buy this barley at a grocery store, right? So take this every day. Now you can take it separate or you can mix it with the Boomer Boost. Now you can take the Gladiator barley, which is what I normally do. And this is what it has all the benefits of the heirloom barley,
detox. You're detoxifying your body. You're bringing down the inflammation, and you're soaking up the free radicals with superoxide dismutase. But it's also helping you with strength. Take it every day. Take a scoop or a half a scoop every day with soft foods, with filtered water, same way you take the Boomer Boost. You can take it separately, or you can couple it. You can take it with the Boomer Boost. But Gladiator Barley also stacks really well with Myotrol. Why? Because Gladiator Barley helps to build muscle. Myotrol helps to express genes to help build muscle. So Gladiator Barley and Myotrol stack really well. Taking the Boomer Boost, the Gladiator Barley, and the Myotrol stacks really well. Now, by taking the Boomer Boost and the Gladiator Barley, or the Boomer Boost and the Heirloom Barley, you're helping control your A1C levels. I'm sorry, the Heirloom Barley and the Boomer Boost together. That helps to control your A1C levels on top of all the other things I talked about. But you control your A1C levels even more when you're working out, building muscle, and taking the Boomer Boost and the Gladiator Barley together. All right, so if you really want to gain strength, control your A1C levels, control your blood glucose levels, and detoxify your body, bring down the inflammation, soak up free radicals, help with your heart health and your brain health, and boost up your energy levels and your metabolism, this is a great stack. All right. So if you're an athlete, you can benefit from this too. By taking the Gladiator Barley and the Boomer Boost for your pre or post workout fuel, then what will happen is you're going to be fueling your body with the right nutrients you need and the high density protein to build strength for your sport. I wish this was available when I was doing triathlons when I was younger, but it wasn't available, so I didn't take it. But the thing is that if I was doing triathlons today, this is what I would do as a pre or post workout fuel with the Myotrol. So, but you don't have to be an athlete, younger or older, to benefit from this. You can benefit from this by just doing some resistance training, some cardio, some stretching, and some balancing, and taking the stack together, and you're going to get huge benefits in controlling your blood glucose levels. You're going to be losing weight. You're going to have more energy. You're going to be helping with your heart health and your vascular system and your brain health. You're going to be sleeping better, and you're going to be detoxifying your body and helping your immune system. It's a powerful stack, very powerful stack. And the cost of these two containers for 1 month is much cheaper than what you're spending for breakfast or for lunch for a whole month. So you're going to save money, you're going to lose weight, and you're going to get healthy. So it's a win-win. Please go to my store, the-studio-reykjavik.com. Get the Boomer Boost and the barley, either Gladiator Barley or the Heirloom Barley. And you can save even more money by getting the Longevity Boost box. In the Longevity Boost box, I have built in a discount where you get the Boomer Boost and your choice of Gladiator Barley or Heirloom Barley. Okay? Or Heirloom Barley, your choice. And by stacking them, you get that stack benefit at a cheaper price. It's called the Longevity Boost box. And you can put discount 5 on top of it. So I'm trying to get these very high quality products in your hands. Take them every day, and you're going to see huge benefits. And stack these things like I've been telling you to stack them for the last 4.5 hours. And you're going to slow down the aging process and boost up your immune system, and you're going to have more longevity. I just gave you the formula. All right? It took 4 hours and 31 minutes. Please go to my store, the-studio-reykjavik.com. Save some money, use discount 5. If you spend $150 or more, you get a free gift until supplies last. Please go to my store, the-studio-reykjavik.com. The link is in the description of this video and all my videos.
White House saying, look, we're holding talks. Everyone wants to call us. You know, we're getting good offers from countries around the world. So there does seem to be an effort from the White House to sort of stop the bleeding to some extent and to tell investors, look, we are trying to make some deals here with these other countries. But then you come out and you see Trump, posting on social media that, we might add 50% more tariffs on China. And it's just really, really perilous for investors trying to figure out where the bottom of this drop is, Joe.
Well, and it's one thing to look at the activity in the equity market, but the bond market is also kind of stunning today. We're now up 18 basis points on the 10-year Treasury yield at just shy of 4.18, up 19 basis points now, Mike. And I wonder if that is just the selling pressure finally coming for bonds after the last few days, or if that is telling us something significant about whether or not the market expects that the Federal Reserve is going to get involved in the short term.
Yeah, Kelly, I think
the market is now trading at 5,108 above the 4,810 support level. Why? Algorithmic traders have come in when the market was just above that resistance level and they started buying. And there's rumor that there will be some countries that are going to de-escalate this tariff war. So what's going to happen is that those countries that have made the deal that's going to be market positive. And so what it's going to do is it's going to shine a light on the problem, the real big problem. And that real big problem is the United States trade deficit with China. And if other countries made a deal, then it forces the issue on China to do something similar. So just let this play out. There'll be more countries that have negotiated with Trump by the end of the week where they have lowered their tariffs or eliminated their tariffs, depending on the country. All right? But the big elephant in the room is, the big problem is China's trade deficit with the United States. All right? And this escalatory tariff war between the United States and China. All right? So pay attention to that.
Michigan, also former member of the Council of Economic Advisors during the Obama administration. Betsy, welcome back to Bloomberg TV and radio. As we consider here the idea that President Trump today has floated even higher tariffs on China than previously thought, potentially reaching 104% with this current regime, assuming there is no backing down.
Yeah, but wasn't the number like 64 and then there was a 34 and then he said that there was going to add 20, so that it added to 54. So Trump is just inching towards parity. I don't think he's at parity yet. But if they did retaliatory, then the United States has to do even more for parity. So China is the one that started this problem. I don't think Trump is going to back down. It's a game of chicken. And, I think Trump's going to win this.
The challenge I think that the Fed has is that it's just not 100% sure what it should be doing. Does it want to try to stimulate demand in this environment? Does it want to slow demand down? If I was there, I'd be more worried about the risk to growth because unemployment has long and permanent effects. So I would really be focused on that. But equally, I think what they're going to have to be looking at is not what do people expect for inflation this year. We all know inflation is going to be higher this year. But what do we expect is going to happen to inflation in 3, 4, 5 years? And we have very fragilely anchored inflation expectations right now. If they see that fragility getting even worse, I think they're going to have to turn to making sure that they keep those anchors in.
We heard from Kevin Hassett.
Not one of these damn experts.
That's the suggestion.
Not one of these experts. Not one. We've been watching this for 4.5 hours. Not one of them say, you know what? Maybe we need more jobs for the American worker, especially the ones that are getting out of high school and college, so they can start their career. so they can start family creation, so they can buy a home. Not one of them. Not one.
Why we have a persistent long-run trade deficit is these people have very inelastic supply.
What's your thought on that? We know that the president spoke with Japan earlier today. He's meeting with Benjamin Netanyahu now. We get to the end of the week. Let's say these 50 leaders cut deals with the president. Does he look like a genius?
Yep.
Markets up 1,000 points?
Yep. That's exactly how it's going to play out.
So let's start with a simple thing. Look, I don't even think Kevin Hassett believes what he was saying. Why are countries coming to the table? Not because they think they're going to absorb the price increase, but because when prices go up all around the globe, we all sell less. The stock market is not falling.
We're the biggest consumer. They have more to lose than us. That's how this is playing out.
And so even if they're passing all those prices on to consumers, it's not good for Nike profits because people don't buy their products. And that's what countries all around the globe are worried about. It's about the shrinking of trade, not about who's paying the prices. The American consumer pays the prices. The administration even believes that they pay the price because they're talking about the great, gain in revenue they're going to get from, these tariffs. So they know that the tariffs get paid here, that it's not going to show up in terms of, hurting some other country. So then you said, well, wait, could Trump be the genius who eliminates tariffs? Tariffs were incredibly low before Trump started all of this. I think the reason he has shocked markets so much is because everybody thought, oh yeah, maybe we're going to get 3, 4, 5, 6% tariffs. That's going to be a huge increase compared to the past, but not these numbers that are like, early 20th century tariffs. Nobody expected them because they are enormous. No other country has them. Calling them reciprocal tariffs is completely
The problem with economists that are on Bloomberg? Most of them don't make much money. They're usually wrong on the market. And 2, or 3, I should say. And 3, they get the magnitude wrong. Either they overshoot or undershoot. Trump, when he does something, it's big. It's big. His whole life was like that. Has to be a big building. It has to be in Manhattan. Everything has to be over the top. It's a very New York-ish thing. All right? Why would the experts think that you would just do 4 or 6% tariffs? When a New Yorker would say, add a 0 to that. Come on. These people are dumb.
Everything you said is exactly right. And then let's add on top of that, that it takes several years to build a factory and get it up and running. We're not talking about building, factories in the United States where we assemble Nikes. We're talking about paying more for Nikes. Even if he's talking about protecting American manufacturing, that he is hammering the American auto industry with this. They are suffering more because of all of the tariffs on.
And don't forget what the American car maker did. They used NAFTA to make more profit by shipping manufacturing to lower cost areas. And when the economy blew up during Lehman, they begged for help. And the American taxpayer bailed them out. GM would be gone if it wasn't for the American taxpayer. So I think they should be thankful that they're still alive. They survived Lehman through a bankruptcy, and that they should be bringing back the jobs here.
The question is, even if you see sentiment further falling off the cliff and inflation expectations rising, does it move the White House that is standing pretty strong on its policies, at least for now?
Depends on who's talking and when.
You're going to have lots of countries making deals because they don't want their economy to tank. Because guess what? We are in the positive right now for the S&P 500 by 18 points. The Asian market was down 6, 8, 10%. So who really has more of the cards on the table here? You know, who has more cards to play with this game of chicken? All right, it's the United States. Don't be afraid. Buy into the market. You're going to regret if you didn't. All right, that's the end of my transmission. Thank you for listening. We were live streaming on Rumble, YouTube, on my website, and on X Spaces. And I might be doing another show tonight, not sure. But thank you for listening. Everybody, stay safe. Don't be fearful. The market, this is a time to buy, all right? Accumulate shares, all right? Don't bet the farm, but just accumulate shares and you're going to benefit in the long run. Don't bet against the United States. Don't ever, 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 ever bet against the United States. Have a good day.